morning, ladies and gentlemen. I want to thank you for your patience this morning. In Africa, we like to start early. Especially in Ghana, when but I want to thank those of you who were here right on time and you've been patient with us up to this point. We're grateful to you. This morning, this is a program that is also being streamed live on we have a Zoom link, so we're going to have people who will be joining us via Zoom, and it's also going to be streamed live on the X Facebook of EGP, and then also live on one of the media partners, NorvanReports, their YouTube, their Facebook, and on X as well. You're welcome to the strategic policy session on Ghana's gold trade and economic recovery. This is a program being done that's by the Economic Governance Platform and the World Bank here. My name is Norvan Reports. I am going to be your moderator for this morning. And so to begin the program, we're going to have some opening remarks which will set the stage and give us a better understanding of what we are going to be doing here. And then we'll have some presentations, and after that presentations, we will then get into the policy discussions that is looking at the risking Ghana's gold trade. I mean, we know what the prices are with gold at the moment, what is happening on the international market. I mean, the story of the gold ball has been told many times, you know, what it has done for us as a nation, how it has positioned our reserves and all that, you know, in terms of what is going on. But there are some few issues that have been raised here and there, and I'm happy to see the CEO of the Chamber of Mines right in this room, and he's also been the champion of Galamsey, stop Galamsey now, not tomorrow, or not in a process of doing it, but it has to be now, just like when Kwame Nkrumah indicated that independence now, not in the future. You know, that's one of the things that he's been doing. So before we start, ladies and gentlemen, I think that we should know the people in the room for the purpose of those who are following us on the social media handles and then on the Zoom link. And if you are on the Zoom link, ladies and gentlemen, what I will ask that if you have any question as the program goes on, you will have to put it in the chat. We'll pick it and then ask the question right here in this room for you. So I am going to start from my stream right there. I think, let me use this mic to make it easy. Try and introduce yourself and where you're coming from for us, and then we can kickstart the program. Trust me that even though 1 hour is already gone, I can finish this program by 12 midday, so that if you have to go back to your offices or go back to other meetings, you are able to do that. So, my good friend, please.
Good morning, everyone. My name is Bright Ayivi from Transparency International Ghana.
Hello, good morning. My name is Raymond Danso from Star Ghana Foundation.
Good morning. My name is Kate Atanga from Economic and Organized Crime Office, UCO.
Thank you. I'm Isaac Edu from the media, the High Street Journal.
Morning. I'm Cecil Premper. I work with Ghana Web.
My name is Dodu Fuad. I'm a business journalist with NorvanReports.
Okay, good morning. My name is Sandra Ubibia Saba. I'm with Ghana Web.
My name is Kenneth Ashigbe. I'm with the Ghana Chamber of Mines.
My name is Raymond. I'm with the World Bank.
Hi, I'm Juliet. I'm with the British High Commission.
My name is Janine Waltz. I'm with the Embassy of Switzerland.
Good morning, everyone. I'm Abdul Karim, and I'm with the Economic Governance Platform.
Good morning, everyone. My name is Mabel Akwe with the Africa Center for Energy Policy.
Dr. Kwachi, Bank of Ghana.
Good
Morning. My name is Samson Kwakwa with the British High Commission.
All right, thank you very much. Samson ends it well with us. So, just an opening remarks. I will start with the coordinator for the Economic Governance Platform, that is Mr. Abdul Karim Mohammed. So, Mr. Abdul Karim Mohammed, please, you give us your opening remarks. Yeah, you may want to clap for him. Yeah.
All right. Thank you very much, Norvan. First of all, once again, good morning to everyone, and thank you very much for honoring our invitation. To most of you, I know this came at a very short notice, and it's also due to challenges with, trying to even agree on doing this and at this particular time, because it was clashing with so many other events. A number of the people that we wanted to be in this room have indicated their interest but inability to be here with us. But we didn't want to delay this any further, because it has become a very topical issue within our policy space that we needed to talk about, at least begin the conversation somehow within our circles. Because a lot of the conversation around the subject matter of this today's meeting has been at a very high political level. But among the development actors, like ourselves, we have not had a lot of that conversation yet. We all know the surge in gold prices on the world market in the past few months, let's say about give or take a year and a half now. It has been climbing significantly. And so resource-rich countries, particularly those that are rich in gold, more or less, we say, are cashing in. But when we bring it home, I think the observation is, and the questions that have been coming up, is whether we are producing gold to accumulate in terms of building our reserves, or we should sell it off to, also store the wealth in liquid cash, so that, whether it's in fiscal assets or in what they call forex reserve, it is still in the reserve. So that conversation has been going on until the IMF report, the review report, became public, and people got to find that the IMF has indicated that the Bank of Ghana made, I think, a transaction loss of about $214 million. And this is what caught the attention of most people. Why? Because we are just emerging from economic crisis that, we are on the path of recovery, and we know our experience from recent history, the central bank's debt accumulation became a big challenge that led us to the crisis. So the question people are asking is, somebody put it very simply, how can you sell gold and lose? How can you produce your own gold, sell it, and make a loss? And these are the questions that have been, this is the question that we have been trying to understand. The questions have been asked. We have had the gold board officials and even the governor of the central bank providing some explanations during official events, but we have not had any deep dive, conversation or policy dialogue of this nature for things to be broken down to the real details for us to understand. And it is for this reason that the Economic Governance Platform decided to convene this meeting, bring together some policy aspects within the sector, actors from civil society, but then also people from the industry who understand the technicalities of these issues much better. Then have representatives from the Gold Board who are at the forefront of this whole business, as well as the central bank, to help us understand things better, so that together we can all chart a path or a way forward that will not take us back to the very bitter experiences that we are trying to get ourselves out of. So if we are here today, this is going to be the key focus of our conversation. I invite all of us to be deeply involved. If you have any questions that are bugging your mind, and as I've indicated, there are industry experts here, but there are also sector expertise. Dr. Steve Mantia was here. He has just stepped out, but he assures me that he will be coming back. As I indicated, we invited people from the Gold Board and the World, the BOG. They are not here yet, but we are hoping that they will be here because we had some confirmation that they were coming. So we look forward to a very productive discussion. Thank you very much.
Thank you very much, Mr. Abdul Karim Mohammed. And also, since it's a collaboration between the World Bank and the EGP, it's just right and important that we have a World Bank rep to also, give us a remark before we begin the program. So, ladies and gentlemen, we're going to have Mr. Raymond Muhula, who is the Senior Public Sector Specialist, the lead public sector specialist at the World Bank, to also give us opening remarks or some kind of remarks. Thank you very much, Mr. Muhula.
Thank you very much. MC, you demoted me twice. So you'll have to be fined a white he-goat. That's what we give in our culture, when a very specific one when you demote an elder. But good morning on a lighter note, and welcome to the bank. My name is Raymond. I'm a lead public sector specialist here at the bank, and my remit covers Ghana, Liberia, and Sierra Leone. And thank you for joining us, and let me also take the opportunity to thank my colleagues from other development partners for coming today. It's always great when we have our colleagues working on these issues among the development partners. It demonstrates our collective support for the government and the people of Ghana, and it just shows that we are here to serve you. The problems that you're experiencing on these issues of natural resource governance are global, and as the international global architecture begins to shift, it is the wealth of your countries that are going to fill that gap. And I don't say this lightly. Every single day you'll hear that some development partner is reducing support to countries or changing the way it is being done. Here at the World Bank, we are owned by your countries, and to the extent that we can support intellectually, as the bank is known to do, in convening support from fellow partners such as the UK government and the government of Switzerland, working in partnership with civil society to raise these issues. I think that's one of the jobs that we were created to do. And so thank you very much to the Economic Governance Platform for convening. I don't know a lot about gold, and I don't know a lot about gold trade. And I'm so excited to be here to hear what the evidence is looking toward. One thing that I know is that these resources, if used properly, can help Ghana achieve the economic growth goals that the President and the administration have outlined. And so we have two hats we're wearing. We are citizens in the sense that we are Ghanaians, first and foremost. But the second thing we are is that we are experts in these topics. And no one has a preserve of knowledge, even when they have significant amounts of power. And so the power that you have as citizens is immense in the sense that you are able to speak from a position of knowledge, but also from a position of heritage. In the end, this is not just the resources that you have in 2026. They're also the resources that will be necessary to build a future that your children and your children's children will inherit. Let me stop here, and on behalf of our country director, division director as we call him these days, I welcome you to the bank, and looking forward to a fruitful deliberation. Thank you.
Thank you very much, Mr. Raymond Muhula. This time around, I'll get it right. Lead public sector specialist. So I don't have to give a goat. Anyway. All right, thank you. So we're going to begin the program. If you just joined us, especially those who are on the Zoom and then also on the social media handles, this is a strategic policy session on Ghana's gold, trade, and economic recovery. And the objectives is for us to look at the real issues and then see what are the challenges within this gold newfound love, let me put that way, for Ghana, which is, some will say, is doing the magic in terms of helping it stabilize its currency, the reserves, and all that. So to begin this morning, we're going to have Mr. Abdul Karim again, who is the coordinator for EGP, to do a presentation on, or walk us through the global geopolitics, commodity, and market, looking at the gold rush as of the moment. So, Mr. Karim, you have the floor to take us through that this morning.
So while they try to bring up the presentation, the PowerPoint, just want to provide a little explanation. So this, my presentation is just going to set the context for our subsequent conversation. And the question that I'm trying to answer is why gold, or why has gold assumed a place of relevance within our context, within the global context, I mean, in general, and narrow it down to why it is important for Ghana at this moment. Yes, as he said, there seems to be a global gold rush, but what is accounting for that? And why gold in particular? There are several other minerals. I mean, people talk about platinum, there's diamond, and the rest. But if you realize, there's a lot of focus on gold. And it also tends to be quite sensitive to the geopolitical developments within the world. So there is, there are underlying factors why gold in particular tend to be so responsive to these political developments within our space. Amen. Are you still having a problem? So how many minutes would it take? Otherwise, I have it on my laptop here. I can. Aha. All right. Thank you very much. Yes. So let's take it up from here. So we are looking at the global gold rush in context. Let's go to the next slide. So I'm starting this presentation with a quote from the Bullion Vault, which is an online investment gold service provider. And it is quite interesting what they say about gold. That gold is the proven quality, long-term wealth store during a slide into deep crisis, the one which everyone else comes to in a bit of a panic. Even if, to begin with, the early buyers are buying gold purely to protect their wealth, they still tend to multiply their money because they are subconsciously anticipating future demand. The best investments do this. Now, what does this tell us? It tells us that gold has become a standard and more or less a safe haven for most investors. So when there are uncertainties within the market globally, people tend to go to gold. Now, let's look at why it is so. The next slide. Now, for centuries, Gold has attracted the attention of kings and queens, the rich and famous across the globe. So you can go as far back as ancient civilization, the Egyptians, the great African kingdoms, the Persians, the Greeks, and the Romans. Gold has served as a universal store of value for thousands of years due to its rarity, durability, as well as immunity to decay. Gold never decays. They say diamonds are forever, but gold, I must say, also has similar qualities. So it is a very kind of reliable store of value. So it's what do you call it? Prized by ancient civilizations like Egyptians and others. I've mentioned this. It evolved from status symbol into the first standardized coins around 600 BC, and later anchored global finance through the 19th century gold standard before becoming a modern inflation hedge. As we know, in the current financial management, a lot of countries or a lot of even businesses hedge against inflation by investing in gold because, as I said, it has become a standard safe haven asset. Let's go to the next slide. Okay. So we are taking it from the ancient civilizations, that is from around 4000 BC to 500 BC. Gold was deemed as divine by Egyptians and by Mesopotamians as durable, non-corrosive, portable store of wealth acting as a medium of exchange. Then we come down to much recent period, the monetary foundation, the kingdom of Lydia. And Lydia today is somewhere around Turkey. They are said to be the first to have minted the first pure gold coins and establishing it as a reliable currency. Then subsequently you have the Romans and other medieval European civilizations. They cemented the status of gold. Let's go on and bring it to our current era. Then we have the gold standard era, that is the 19th century all the way to about 1971. Where major world powers, the UK in 1816 and the United States in 1879, adopted the gold standard, formally backing paper money with physical gold, making it the bedrock of international finance. So this is how it evolved. In the sense, and when we talk about currencies that are backed by gold, so they created a standard where, let's say, if you take $1, they say it is worth, let's say, 32 ounces of gold. I think it was 32 ounces that they used, from the beginning. Now we are in the modern era. During President Nixon of U.S. time, he abandoned the gold standard. So the link between gold in 1971 was put off, ushering in the fiat currency, where the money is looked at by its surface, its face value. Right? Now, since then, gold has functioned as a safe haven asset, preserving purchasing power during periods of high inflation, economic turmoil, and geopolitical crisis. And this is the point that I made, at the beginning of this presentation. Let's continue. And these are some of the qualities that why people always, it's indestructibility. Gold does not rust or decay. It's rare. And people will say, we have been mining a lot of gold, so why do you still say gold is rare? Can you have an assumption, the volume since the beginning of time, the quantum of gold that has been mined so far? Yeah. Dr. Ashigbe is here. He's from the industry. But it's estimated to be less than 250,000 tons. All the gold that has been mined is estimated to be less than 250,000 tons. A ton is 1,000 kilograms. So if you want to put all the gold that is in the world, in fact, it is estimated that when you melt everything together, you can form a cube that may fit into a football field. In fact, there will be some space left. You understand? So it tells you how rare it is. It's not as common as it may seem. that when you listen to the news, they are always mentioning how much gold maybe South Africa has produced, Ghana has produced, Russia, and the rest. So it is still rare, and that's why it's still a precious mineral. So its limited supply makes it immune to debasement by governments. So it's not as easy as governments will easily print currencies. You can't create gold easily and add to the stock to increase your store of assets. Then its universal acceptance, recognized across all cultures and generations as a form of wealth, also makes it a very, very desirable mineral. Then, of course, we have mentioned the safe haven, often outperforms traditional assets like bonds and stocks during severe inflation, such as was witnessed in Germany and in Japan during their past crisis. Okay. Now, I'm taking you down to why central banks tend to take interest in gold. Now, many central banks continue to buy gold to diversify reserves and strengthen financial stability. So, usually when we talk about reserves or international reserves, people tend to talk about maybe forex. But gold is also a store of value, as it has been indicated earlier. In order to diversify, people want to also have a stockpile of their own. So in our vault, I think until a week or two ago, we were talking about how many in Ghana, about 36. But the central bank has sold off. And it also created some form of uproar. People were talking about, hey, we have accumulated so much, this government came, it has sold off. Then yesterday, the news was that gold prices have plummeted. And people were like, oh, then they were very strategic in selling off. So sometimes you don't know what to do to please the masses, but those at the helm and who understand the space always have to make the right decision. Gold is a finite physical commodity whose supply can't easily be added to. As such, it's a natural hedge against inflation. Also, gold carries no credit or counterparty risks. It serves as a source of trust in a country and in all economic environments, making it one of the most crucial reserve assets worldwide along government bonds. So these qualities of gold is what make governments, central banks want to also create their own reserves, as he said, because it serves as a hedge against inflationary pressures. Let's go to the next slide. And as I told you, these are just few slides, so I'll be done soon. The last one here for central banks is that gold's inverse relationship with the US dollar, which is another major reserve asset, is an added element to its appeal. And when the dollar dips in value, gold typically rises, enabling central banks to protect their reserves at times of market volatility. So we have all seen the current government, US government's policy, the tariff wars, that has also triggered some form of trade wars, more or less. Many people reading the market say, you know what, we better invest in gold. It is safer because relatively the dollar has not been performing as it used to be. And so a lot of currencies are doing well against the US dollar. So gold becomes a preferred store of value. Let's go to the next. Now, in recent times, the world economy has been in a flux. A lot of uncertainties. We emerged from COVID with a economic downturn. A lot of countries found themselves in a debt trap, and the global market also saw a dip, and that also made gold a lot more attractive for a lot of investors. Then, just when we thought we were recovering and things were stabilizing, we had Trump 2.0 with his trade tariffs and trade and tariff wars that are still ongoing. Just yesterday, I think he signed another deal with the Indians, committing them to stop buying oil from Russia. And so people are like, oh, okay, if that is the case, then India may also, because India has been buying cheap oil from Russia, refining it, and selling it to the Europeans who are dumping Russian oil. You understand? Because when they bring it to India and they mix it with all the others that they have bought, you can't identify the Russian oil from the rest. Now that they are making a commitment not to buy, it means they will buy from US, but it's going to be relatively more expensive. So it's a balance there. Then also we have seen wars, rumors of wars going on. All these are contributing to fueling the gold, the attractiveness of gold. One, the major one has been Russia and Ukraine. It is still going on, it's still raging. Very terrible winter in Ukraine. Triggered a lot of investment, people dumping a lot of assets and rather putting their trust in gold. We have currently ongoing discussion or negotiation between US and Iran because, well, it started first with Venezuela, the capture of Maduro and the takeover of their oil resources. So if you are an investor or you have any assets in Venezuelan oil, you know it's going south because America has taken over. Then now we have Iran also coming up. So all these issues have come together to fuel the instability that we are observing and making gold more attractive. And all these have contributed to the performance of gold and why we are seeing more or less a rush, a global gold rush. So let's look at the performance of gold on the world market over the past few years. So this chart is looking at the gold price performance since 2016. And if you look at it, you will see from 2024 how sharply gold prices have been going up. And that is where the Trump 2.0 actually started. So you see, where is the pointer? I'm trying to see if my pointer will work. Oh, I can't see it. But you can see to 2024 from there, you see how high it has gone. But we also know that, yes, even as gold prices have appreciated and resource-rich countries are cashing in, it is also very sensitive to any new development within the space. So it also tends to be quite risky. I mean, it has some form of risk associated with the trade. And so countries have to balance. I mean, it's a careful balance as to when you buy to accumulate and you offload to cash in when the market is good. So let's look at two recent stories that happened, and these happened within the last 24 hours, actually. There was a mention of a new, chair for the Fed in US, and that resulted in gold prices falling somewhat. But this dawn, when I opened my phone, I said it has rebounded. Just after the deal was made with India, it had rebounded 2% again. So those who were crying yesterday that they have lost, because it showed off, I understand, about some trillions of dollars actually, yesterday, just yesterday. And today, it is back on again. So it tells you the level of volatility that we are dealing with. You understand? So those who took the chance and sold when the price was high, yes, they have cashed in. But those who also said, okay, let's wait and see, we say, well, we told you it has come back. But for a country like us, that has been locked out of the international market, we can only do minimal borrowing locally through the treasury bills, as well as concessionary loans. The question is, Do you play that kind of game? Do you store for its sake, or you can offload and use it diligently to build the economy and put it on a firm ground towards recovery? And these and many other issues are what is going to inform the conversation subsequent to this. So, ladies and gentlemen, this is where my presentation ends. As I said, it's just to create the context for you to understand why gold is so attractive and it has become so topical in recent times, and why we seem to be doing so well as a country that is rich in gold. It is within this global context that these developments are taking place. So, Norvan, I would like to thank you. So you take it from here.
All right. Thank you very, very much, Mr. Let's put our hands together for him. I mean, he's tried his best to, connect the global trends to Ghana's real policy choices that we are making as far as gold is concerned. And, I always say that as gold strengthens globally, the key question is not about the price. I'm sure some of you will be surprised, but it's whether Ghana's system actually is structured to capture the value safely. That is what it is. It's one of the key things that we all need to look at. It is whether the system that we have is able to capture the value safely. And that goes to areas that I know that the discussions will go to, because if you look at the risk areas as he was talking about, I asked myself, where exactly are the risk areas that we need to look out for, and who are those bearing those risks that we are talking about, and also how big is it in terms of the risks we are looking at, and more importantly, what do we need to do to fix it, or how do we fix these risks that we have? I wish we could stay on this for some few minutes and try and ask the probing questions on his presentation before I will go to the second presentation. And I'm going to throw the question to all of us. If you look at the Karim, I think I should actually come to you because you did the presentation. How durable is the current gold price rally, if you look at it, and if you're looking at the cyclical or the structure, how durable do you think it is, based on what you've told us?
Thank you very much, Norvan. I think the market watchers, all the credible market watchers that you can think about, I mean, the major Bloomberg, you can talk about Financial Times and all this, are projecting, I mean, the economists and the rest, they are all projecting that gold's performance will still be up there through 2026 because the developments in U.S. doesn't give enough confidence to investors to want to offload significantly. So many are still banking or betting on gold, right? There was more or less, because we all know that the dollar is the global trade anchor, more or less, is the major medium of exchange and also a store of value or assets. And any development within U.S. has direct impact on all other economies. So the dollar tends to be a major dashboard that investors look at to inform their decisions. And we have the president, President Trump, going after the head of the U.S. Treasury, he thinks inflation to be coming down more than it is, right? And even threatening to replace him which he doesn't have the power to do anyway. But I mean, he can create the turmoil. And because of that, that alone caused a lot of panic in the market, and a lot of people have shifted their, what they call investment, from running away from the dollar. We also have these undercurrents of BRICS trying to create an alternative medium of exchange. It hasn't gained ground as much as it's announced itself. But if you look at what China is doing, China is now establishing trade relationships with countries whereby they can pay using the Chinese yuan, right? So as more people diversify from the US dollar, and they don't have, I mean, if the yuan has become a global trade currency, we are not there yet. So the uncertainty there is also quite high. So gold still becomes a very reliable and safe area to play your wait and see games. You understand? And so they are projecting that for the foreseeable future, and I'm not talking about very far, I mean, you are looking at 6 months, 12 months horizon, gold will still continue to do quite well.
Okay, great. And ladies and gentlemen, when I put a question, it's open to all of us. It's not just for Karim alone. And with what Karim has said, it brings to mind a question that I've been asking myself. Should Ghana treat gold as a trade revenue or reserve insurance? I mean, think about it for a minute. Should we treat gold as a reserve revenue, or we should look at trade revenue, or we should look at it as a reserve insurance that we will hold? Because it's something that is already happening. But what should it be? Maybe I'm going to go to one of our people here, that's Dr. Kwachi, but not. I'm speaking to Dr. Kwachi because it's an economist. I want to just pick his thoughts on this question. Let me put that on record so that people, whatever he says, is not taken out of context, or he's not represented as speaking for Bank of Ghana. Yeah. So, Doc, I mean, from your perspective as an economist, do you think, what would we do? Should we treat gold as a trade revenue, or we should look at it as a reserve insurance?
Well, I don't think it's one or the other. I mean, it's both, in the sense that as a country, we own a lot of gold, and therefore we export, gold, and then we receive in return foreign exchange, which comes, well, if is owned by government, it comes back to government, and the foreign exchange is surrendered to Bank of Ghana to add to our reserves. But then government also obtains revenue as a result. So I think it's both ways. It's not one or the other. But I think that when we will come to Bank of Ghana's the management of reserves, and then I have some more to say about that. Yeah.
Who wants to share his thoughts about the question I asked? Doc, you want to say a word or two?
Well, again, I would agree with Doc that definitely we need to live today. There are challenges that are confronting us that require some forex. So definitely you would have to trade it. But you also would want to see how you are protecting yourself. So how do you balance that? So that's a careful balance that we need to play. And especially as we are rallying. And for me, it's the reason why the issue of the Gold Minerals Revenue Management Act is important. Because at this stage that, even you take the royalty rate of the 5% that is there, when your gold prices were at $2,000, 5%, whatever you are getting, compared to what you're getting, that margin that is coming in, what are we doing with that? Are we just spending it? How are we investing it? So those are the conversations that we have to do. And again, structurally, what are we doing to the economy itself with all of that benefit that is really coming in there? Because there are some critical investments that we need to do that will drive our development going forward. So are we focusing on putting that investment into these particular areas? And those are the critical questions that we need to be asking ourselves. And ourselves and our leaders, this is the time to also sacrifice. Because again, when the peak is this high for this long, it means the trough will be that low and for that long period. So what are you doing in between then to make sure that when that happens, you have built that buffer so that you are able to ride the storm? So it is really important. And again, as a people, we've not demonstrated that, especially the modern Ghanaian, we've not demonstrated that we have the tendency to want to sacrifice for tomorrow. But again, when my colleague was talking, he talked about the challenges that we see. And the way the world is going, it will not take a very long time before we get hit with another COVID. So this time we really need to be preparing ourselves for those challenges that are going to come. And this really is the time to really be able to do that.
Doc, I'm going to stay with you there. That's Dr. Ken Ashigbe, who is the CEO of the Mining Chamber. You used the key word that I underlined here, protecting ourselves and ensuring that we do the right thing. So I'm going to ask you this. At what point does what we call the aggressive gold buying create micro risk? Macro risk, let me put that way. Yeah, that's the right word I want to use. At what point?
So again, it is what you're buying the gold to do. It's not just an issue of just buying the gold. It's what are you buying the gold to what are you going to use the gold for? So again, the question is whether you're putting it into your reserve or you're trading it again. And so the thing about it is one of the challenges that we face is the fact that we don't really have a gold industry. So basically what we do with our gold is that we trade it. We're beginning to want to build the refinery business. But even when you build a refinery, in terms of the utilization of the gold, what are you going to do with that? So again, it's great that Bank of Ghana is playing in the market. And again, what we have seen recently, tends to justify what Bank of Ghana did in terms of its intermediation. Gold is a commodity that has benefits that we need. There are forex that at the point where you require forex, if you hold on to your gold and you let the demand drive your forex down, what happens then is that your servicing of your debt, goes up and it drives other things along. So how are you intermediating all of that is the question we want to ask, and fortunately for us, the Gold Board has come in and doing what it is that is doing. The Bank of Ghana itself, working together with the large scale in terms of putting in the gold purchase agreement that has been running before this government came and it's continuing. It's a great thing that we're doing. The thing about it is that we need to be intentional about what it is that we're doing with that to ensure that we're exacting the maximum benefit out of it. Definitely there is something for stability of the macroeconomic indicators, and that really, really is important. And so we need to play that, as we also need to figure out what we do in terms of building that strength to be able to drive the growth. Because one of the things that happened last year, again for us, is that the expenditures itself were held, but this year you're going to spend. So as you spend and the need for forex comes in and all of that, what are the things that you need to play? And we need to be also very intentional about the geopolitics that is going around and seeing how we play so far as that space is concerned. The BRICS conversation is a very interesting one. The fact that we're almost going back again to the gold standard again, it's also a very interesting one. And we cannot be passive so far as that is concerned. How do we rally the global south together, to be able to make sure that we are not passive and just receiving that, but we're beginning to influence that? It's definitely something that we all need to be participating in and making sure we're shaping.
All right, thank you very much, Dr. Ken Ashigbe, who is the CEO for the Mining Chamber. If you just joined the conversation, especially on social media or you're on the Zoom link, this is a strategic policy session on Ghana's gold trade and economic recovery that we're having here at the World Bank. It's at the behest of the Economic Governance Platform and the World Bank. And we are currently at the World Bank office here in Accra, having this important conversation, looking at what is happening as far as, how Ghana takes advantage of the gold rush, as some others will say, to build the nation that we have to build. What I'm going to do now is to bring in Dr. Kwache. And Dr. Kwache, I want you to speak on the benefit capture and the risk mitigation in the gold trade. I mean, give us a remarks on that area. You have about 5 to 10 minutes. Oh, okay. You are looking at the gold reserves, right? Okay. Oh, okay. Dr. Mantia was supposed to have handled that. Sorry. I mean, because I started a discussion on the risk area, I wanted to just dovetail that into it before we go. But I think it's important. I still can come back to you and have you look at the gold reserve strategies, outcomes, and the future. Yeah, what I'm talking about now, what I need you to look at is the gold reserve area for us. So if you can give us your remarks within 5 to 10 minutes, and then I still have some questions to go around the table, and then we'll deal with others. Thank you.
Okay. So the Go for Reserves, program. Again, I'll not be able to go into the details of the transactions that take place. So I'm going to give you a general overview. The program, as it's been said, is actually not new. Bank of Ghana used to purchase gold from the former Precious Metals Marketing Company, which has now been replaced by the Gold Board. And the bank buys the gold and adds it, I'm talking about refined gold, and adds it to its reserves. Because as we've been told, gold is a very special, metal, and it has an important place in our, monetary, history. And therefore, that is why countries add gold to their reserves. That's the only metal that's counted as part of your reserve. So gold is as good as, if you have it in your reserves, it's as good as, dollar and all that. So what Bank of Ghana has been doing is that we are taking advantage of the fact that we have a lot of gold in this country. Previously, most of the gold, a lot of the gold is mined by small-scale, miners. In fact, you'll be surprised to hear that currently, I understand that they mine over 50% of the gold. The big companies mine another 50%. So it is huge. And in the past, most of it was smuggled outside, and the government was deprived of the proceeds. So what the Gold Board has been able to do now is to bring them together and then be able to buy the gold directly from them, the small-scale miners. And then Bank of Ghana has an arrangement with a Gold Board whereby Bank of Ghana gives money in advance, that's CDs, to Gold Board, and Gold Board will go and buy the gold from the small-scale miners, somehow send it abroad to be refined, and then they surrender, they bring back the gold, the refined gold, to Bank of Ghana, and then Bank of Ghana adds it to its reserves. And in fact, we've been told that, at a point in time, the reserve component of the gold component of our reserve had risen to over 40%. And we were being cautioned that because of the volatility in the prices, if we kept so much gold as part of our reserves, we are vulnerable, to the swings in the value. And so that's why a lot of you, if you follow Bank of Ghana's statistics, recently, when we published our monetary and financial statistics, everybody saw that the amount of gold as part of our reserves had dropped significantly from about 30 tons to about 18. And then in terms of the value also. So we had to put in a memorandum item, an explanation to say that what we did was just a rebalancing of the reserves. In other words, we offloaded a substantial part of the gold, in exchange for foreign exchange dollars and so on. So you see that our overall reserve level had not declined. It's just a rebalancing. And I'm happy that I'm here to make this, to convey this message clearly, because people were saying all kinds of things. So you came and met 30 tons of gold, and you've run it down to 18 tons. Where has it gone to? And all that. But it's just that we sold, part of it because we were sitting on too much gold. In fact, by international standard, in fact, the IMF, for instance, was concerned, and they were telling by international standard, the gold content composition of the reserve shouldn't exceed more than 30%. We had reached over 40%. That's why we scaled it down. Now, in the other issue that has come up is the losses that Bank of Ghana is making in doing, dealing with, Gold Board. Yeah, naturally, because Gold Board buys the gold in raw form, they have to get it, refined and all that. So along that value chain, they also make some losses. And Bank of Ghana has agreed to assume some of those losses. And then also, I think Bank of Ghana also pays the Gold Board some kind of, commission. And then when it comes to trading, the pricing of the gold also, Gold Board will buy the gold from the miners, not at the well price. They can't afford to do that, so they buy it at some kind of discount. And then they also sell it to Bank of Ghana at an agreed price. So somewhere along that value chain, Bank of Ghana is making losses. But we shouldn't also forget that we are also making gains for the country as a whole in terms of being able to accumulate this large amount of reserves. That is what has helped to stabilize our currency. And the benefits of a stable currency is also, you feel it in terms of general macroeconomic stability. That's helped to anchor inflation, whereby we've been able to bring inflation down to 5.4%. So when people talk about the losses that Bank of Ghana is making, they should also think about the benefits to the economy arriving from those losses. In fact, the IMF published that Bank of Ghana made a loss of $214 million in 2025 from these gold dealings. And we were able to accumulate reserves over that period of 10 billion from the gold trading alone. Now, I computed 214 million as a percentage of 10 billion, and I had 2.14%. Okay? So in relative terms, you make a loss of 214 million and you gain 10 billion. That's what has happened. I am not saying that the loss is not significant. So going forward, the idea, the strategy is that Bank of Ghana is going to separate itself from Gold Board. Gold Board is going to act on its own. Yeah. And it means that government will have to provide it with some kind of funding, initial funding, and Bank of Ghana will not be doing that anymore. So that Gold Board will be capable of buying the gold from the miners, taking it out to refine it, and then Bank of Ghana can go to Gold Board and buy the refined goods, so that we can avoid the losses that come about along the value chain that I talked about. So I think that is the strategy, going forward. In fact, talking about the losses made, by Bank of Ghana in trading with Gold Board, most people probably don't know that even when it comes to CD liquidity management, in other words, Bank of Ghana withdrawing excess liquidity, CD liquidity from the economy in terms of managing inflation, we also make losses as a result, because we pay interest on the CDs that we withdraw from the banks. We pay interest on it. We make losses, but that is a price that Bank of Ghana has to pay in, controlling, stabilizing the economy. The benefits we get is the low inflation, the exchange rate stability, and all that. But Bank of Ghana makes losses, and we try to, compensate those losses, with other receipts that we get from elsewhere. Unfortunately, or maybe fortunately, because of the IMF program, Bank of Ghana does not lend to government. But most central banks lend to their governments, and they gain something from them. Now, because we don't lend to government, we don't earn anything from, normally what we would have gotten from lending to government. Maybe after the program, the Bank of Ghana asks us that we can lend 5% of last year's revenue to government. Not more than 5%, but even that 5%, you can earn something from it. So that will help us in balancing our books. So maybe that's where I want to stop. I think what I need to add is that we do not see just this gold trading as solving all our economic problems. No. You see, the real sector of this economy, the performance of the real sector is very important, because that is where we are going to, if we transform this economy, that is where we are going to be able to earn a lot more foreign exchange. As far as Bank of Ghana is concerned, the only thing we can do is to manage, what we have, the reserve that we have. But the real sector of the economy also needs to be transformed, and that is not entirely within Bank of Ghana's control. Thank you so much.
Put your hands together for Dr. Kwachi. Doc, it's become very difficult for me to ask you the very hard questions because you are speaking not in your capacity as the Bank of Ghana representative. So it's very difficult for me. But I still can pick your thoughts. I mean, your thoughts, your personal thoughts on, because I've heard and I know for sure that the central bank is not a profit-making institution. And that's very clear. But I still want to find out from you that as far as this gold project is concerned, what exactly is the objective? Is it just to stabilize? Or you want to still make some profit to deal with the FX issues that we were saddled with many years as a country?
No, for Bank of Ghana, as you have said, the central bank is not a profit-making, organization. No. So the objective really is to build our reserves. In fact, from the last count, I'm sure you must have read that we've increased our reserve to over $13 billion, 5.7 months of import cover. As far as I can remember, we've not reached this level of reserves, and we want to continue to build even beyond 6 months. Is it because that is how you get a strong buffer for your currency? And maybe talking about the reserves, to back the currency, let me take this opportunity to explain that in the news there was a lot of talk about Bank of Ghana just pushing dollars into the market, intervening to the tune of $10 billion last year, and that the purpose was just to intervene in the market and keep the currency, stable. Now, what I want to explain is that, because Bank of Ghana takes custody of a lot of the foreign exchange inflows into the country, we've talked about gold, from gold exports.
Cocoa proceeds?
From cocoa proceeds. From some remittances come through Bank of Ghana. Government loans come to Bank of Ghana. IMF disbursements, World Bank disbursements, all of them come to custody of Bank of Ghana. So we cannot sit on these reserves and starve the economy of foreign exchange. We have to release supply foreign exchange to the system. I mean, for those who are importing goods into the country, government repaying its loans, we have to provide the foreign exchange as a result. And you cannot interpret all that we are providing to the market as meant for intervention. We call it intermediation, in the sense that you have to supply foreign exchange back into the system. At the same time, we are also watching our level of reserves. As long as we are not depleting our reserves and we are going up, continuing to build that, we cannot say that, we are pumping too much foreign exchange to the economy just to stabilize the economy. So I want to make a clear distinction between supplying foreign exchange for intermediation purposes and intervention. Normally, central banks do intervention only occasionally when you have temporary shocks affecting your currency. Then you can intervene, just to counter those temporary shocks. That's what we call intervention. And most central banks, do that. In fact, during the COVID time, financial crisis and so on, other central banks also intervene. So we also intervene, but only occasionally. Most of the time, what we do is intermediation.
Okay. I think that you've spoken about the internal controls to govern the purchases. You've told us what the central bank is going to do going forward, ensure that you don't get yourself into the losses areas. But let me ask you, how, in your opinion, how are price risk hedged? And is this something that should be considered by the central bank?
Sorry, I don't think I'm an expert in that. But I've said that now the central bank is going to separate itself from gold board.
Yes, you have said that.
Yeah, we were incurring losses from some of the pricing, dealings with gold board. So once we remove ourselves from that, of course, what we have is then the gold. We just buy gold from cocoa board, refined gold, gold board, refined gold, not only from gold board. We can buy from anywhere else, from other system. Either. Well, fortunately, the difference between what we are doing now and maybe previously, now we are buying the gold with CDs from the local market. That's the advantage. This is gold that is owned by Ghanaians. And we should even be aiming to own more of our gold in this country. I think that is what is probably coming under this benefit capture. Some of us would want to see us own a lot more of our gold reserves because currently foreign companies come and mine our gold, and because of the kind of fiscal regimes that we agree with them, they take away a large portion of the gold. We should aim to own a lot more of our gold reserves, because that is what we can use to back our currency and keep it stable over long periods of time.
And I think that it's important we put on record that I think the new gold board law makes it very clear. You only have to buy gold from them. And so you cannot buy from any other place. They are the sole company or institution, let me put it that way, that purchase and sell gold. Let me bring in Dr. Kenashigbe, who is also from the mining chamber, because I know you also sell some part of your gold.
Well, 20% of our gold is sold to the Bank of Ghana.
Yes.
And then in terms of the repatriation of the currencies, if you look at, I don't have the 2025 numbers, 2024, over 70% of Forex came back into the market. But again, the issue, Doc, you make a point about over 50% of our gold is now small scale. And so if you add 50% and you add 20% to it, 70% of our gold is in our hands. So it's we deciding what we do with it. Those are the questions that we need to ask, because again, now majority of the gold that we do in this country is small scale. That's and the Bank of Ghana will tell you the data. They did about 51% in 2025. And so if you add the 20% that is supposed to be coming from small scale, the majority is coming to us. So so the conversation about foreigners are coming to take our gold really is not factual. Again, increasingly, another thing that is beginning to happen is that you are beginning to have Ghanaians also, in the gold business. Adamus, for example, is a 100% old Ghanaian mining firm.
EMP
now we know Azuma is coming. It's not EMP, it's Azuma that is going to start greenfield, business. You take the likes of Asante, Chirano and all of that has significant Ghanaian ownership. So we need to start looking at what actually the landscape is. So majority of the gold now in Ghana is owned by Ghanaians. Is mined by Ghanaians and is owned by Ghanaians. Because already small scale is doing the challenge again. Is how much value are we extracting out of the small scale gold? Because you take 2024, for example, 17.7 billion was what the large scale gold miners did. Then they were producing, small scale was doing about 34%. In 2025, the small scale sector might be doing less than 2% in terms of the returns to us. But then they would have mined 51% of our gold. So again, we need to start looking at that. So if you look again, I know we're not discussing that, but if you look at the royalty document that is gone to Parliament now, I'm just hoping that if you look at the surface of the text, when it talks about sliding scale being from 5 to 12%, that we think would hurt the system. It means the small scale miner would have to be paying. At today's rates, they also have to be paying 12% of 12% royalties on their revenues back to government. I'm just hoping that it's not going to be a lit, regulation or that we're going to be doing. But everybody, as the Constitution says, in terms of the issues around being fair and not being discriminatory, so far as application of our laws are concerned, that particular ally that is in Parliament will be applicable to everybody who has a gold mining concession.
Important point that you make over there, that particular ally. Well, but I don't want, as you said, I don't want us to get into that arena. Let's just stay within. Do we have anybody from Gold Board here? Okay, so they are not in the room. So I would spare questions in those areas. But let me quickly ask. Karim, you wanted to say something.
And again, thanks to Dr. Kwachi for, stepping in, speaking to the issues around the Gold Board and World Bank, BOG's relationship and all that. I think there's an aspect around the price at which Gold Board buys the gold. The fact that it is also not just a matter of trading to make profit, but a deliberate policy to buy at premium price in order to discourage the smuggling. Because that's where he started from. From that, before the establishment of Gold Board and its new act and the current setup, there were a lot of leakages because the system was too loose and all that. But with the current policy, to buy at premium price. So whatever price the gold is being sold on the world market, that's how much they are buying it here. So there's this incentive for you to smuggle it anyway, because your transactional cost will be a loss to you. And because of that, now they have confidence enough to sell it to Gold Board. And that is how we are raking in a lot more. But the issue is, as he said, that will also mean that when you sell it on the world market, you are not going to make anything. So all your transactional costs and operations costs is what constitute the $214 million as to whether you call it a cost or a loss. Because the argument has also been made that if you look at the broader implication on the economy, then you can't call it a cost. Because every investment, as the cheap proverb says, you understand? You use, when you are going to fish, you put a bait there in order to attract the distance. So you need to invest something in order to get the benefit. So I think that is a point that I wanted to make. But there's a lot more to be said about the point that he made in terms of we developing the real sector in order to generate a lot more value. And for me, I think it is a very, very important point that cannot be emphasized enough. Dr. Ashibe made the point about as to how much value we are adding to our gold. I mean, for how long have we been doing this? Over a century, and we don't have how many? Refineries do we have in this country? You understand? The real value in the gold production does not lie in just selling the raw gold, but as to what value. How come countries that are not even mining as much or are producing as much as we are doing are raking in a lot more revenue, creating jobs and all that for the sector than some of us? So I think that is the issue around the benefit capture, which goes far beyond just the dollars, but the multiplier effect that we can bring.
And it brings me to what have other reserve accumulation countries done, right, that we need to look at? Or what are the wrong things that they did that hurts the economy in the future or in the long term that we must ensure we do not do? It's an open question, ladies and gentlemen. I've seen, we've had some people, maybe we should even hear from our friends from the British High Commission or Switzerland Embassy, or even from Mr. Mahula himself. Any of you also can speak. Integrity Initiative, our friends from the media, those in the room here. It's important. I mean, I'm sure when the whole gold thing started, when we got to know the Bank of Ghana was buying, and I don't want to introduce that into our discussion, but I think it's important that I still bring it on. You know, the Galamsey discussion came on, how people were mining unwholesomely. Let me put it that way. I'm just trying to be charitable. I can see Dr. Kenashibe looking at me. He wants me to be very hard. No. I was going to bring this into Doc, I wanted us to go for a break, and when we come back, we'll get into that properly. But I think that we've got to the point where I need to introduce it. I'll stop it at some point, and then we'll come back to it. Our lead,
Raymond. So, two questions
yes,
that would interest me. One is on this issue of Galamsey and whether this new approach aids or abets it, right? The first one. The second one, because indirectly we've created a market, right? So the first one. The second one is on this question of what would it take to create an industry here to process. One of the things the bank is emphasizing on these days is job creation. And to the extent that we can use this natural resource wealth to create jobs for our youth. I would like to hear a bit about what have been the constraints and what are some of the policy actions that you think might be useful to spur that. Thank you.
Okay, thank you. So, as I indicated, I wanted us to have gone for a break and come back. And so, at this point, I will pause, stretch your legs, drink something, let's come back in. And the two questions that Raymond has raised will take us into looking at the legislative change that is needed, will take us into the reporting reforms that we should be looking at, will take us a look at the risk controls on the Galamsey itself, and what it means to us, because if you have this Galamsey happening, your gold can be banned on the international market. We should bear that in mind, and then look at the governance structure changes that is needed and the real transparency mechanisms, the true effect of these mechanisms in what we have to do. So let's break for some 15 minutes and come back, and we'll get into the dialogue proper to conclude the discussions for the day. Thank you very much. we're going back live quickly. What I'm going to do is to go back quickly and have Dr. Mantea, who has come in, to now also take about 5 to 10 minutes to talk on the benefit capture and the risk mitigation in gold trade, and then we'll get into our discussion proper. So forgive me. So Doc, you have the floor. He knows a lot about this gold. I wish I could even ask him to represent Gold Board, but he's not a representative from Gold Board, so I won't do that. Yeah. But he has a lot of information. I mean, he played a major role in when the law governing Gold Board, the formation, he played a major role in it, so he can, So today, Doc, you have the floor, 10 minutes, benefit capture and risk mitigation in the gold trade.
The question takes its root from the general governance of our mineral resources in this country. And incidentally, I happen to have worked very closely with the team that developed the Petroleum Revenue Management Act for this country, led by Professor Makotofo and a few others, former chair of the parliamentary committee, Moses Asaga. We worked very closely, toured the world to find the best model for Ghana. In that exercise, we were guided by the lessons from the mining sector. So in fashioning out the PRMA, the Petroleum Revenue Management Act, we were mindful to ensure that we have a mechanism for dealing with the volatility nature of petroleum revenues. So we set up the Stabilization Fund. We also recognize the intergenerational interest in the resource. So we set up the Heritage Fund with clear rules. We also set out clear investment rules, assets into which we can invest our petroleum revenues and no-go areas. We were mindful not to take unnecessary risk with our petroleum revenues. So we decided that we'll invest our resource revenues exclusively in low-risk instruments. As the pot grows bigger, we may want to diversify, but from the start, we want to be conservative and to preserve the value of the revenues we derived. We also were mindful of the recklessness of political authority. So we set up a citizens-led oversight body in the form of the Public Interest and Accountability Committee. All these were guided by lessons in the mining sector. Unfortunately, we did not go back to correct the mistakes in the mining sector. So as we speak, we do not have a framework that guides how Ghana takes advantage of the gold boom that we are all enjoying today. So if we're not careful, it becomes from hands to mouth. All expenditures will be short-term to address short-term imperatives. And that is not the way to sustain the benefits of your gold resources. And so going forward, I think it's important for government to look at a framework similar to the PRMA. In fact, that process started a couple of years ago, about 10 years ago. Incidentally, I chaired and I still chair the Ghana Extractive Industry Transparency Initiative, and I was very part of the process. We were developing what we called at the time a Natural Resource Governance Bill, which harmonizes the way we treat our natural resources, gold and petroleum. But as we went through political transitions, we lost track. But that draft bill exists, and I know it's with the Ministry of Finance. It may be helpful to go back to it and harmonize the management of our natural resources in ways that takes advantage of the good things that we have done for oil in this country, including a citizens' oversight that will follow through how we use the revenues and report back to the general citizenry. Yes, indeed, I've been very close to recent developments in the gold sector, especially the establishment of the Gold Board. I work for the UK Ghana Gold Program, a UK Home Office support to the government of Ghana in dealing with the illegalities in the small-scale mining sector. We began the project implementation by looking at some of the weaknesses and gaps in our laws that facilitated illegal mining, and associated with that, illicit financial flows. Realized that it was, at the time, it was so easy for Boko Haram, a terrorist group in West Africa, to set camp in Ghana, mine gold to finance their terrorist activities because of weak customer due diligence across the value chain. So we started working with state institutions, working with Minerals Commission, the Gold Board when it was established, YOCO, and the Financial Intelligence Center. The biggest risk in the gold boom that we see today is the risk of illicit financial flows, and associated with that, the financing of serious organized crime, which can come back to hurt Ghana, the very foundations of our national security. So we've been working very closely with the Gold Board. We took their Minerals and Mining, the Gold Board Act. We reviewed it in line with the Financial Action Task Force regulations to ensure that we are compliant. Once you are compliant, you deal with a lot of the risk associated with illegal mining. So we started there, and we realized that there were serious weaknesses. We spoke to the Financial Intelligence Center, which has the mandate to ensure alignment of this country with the rules of the Financial Intelligence Center. Let me explain a little bit for those who are new to this whole concept about money laundering and alignment with the Financial Intelligence, Financial Action Task Force regulations. Ghana is a signatory, and this has been led by the world leading economy, the G7 countries. And it followed the bombing of the World Trade Center. You know, it changed the way we live our lives, including the way we travel and the kind of search we go through. But the leading industrialized countries realize that if they can cut off the bloodline to terrorism, if they can, which is finance, then of course we will go a long way in dealing with the threat that the world faces in terms of insecurity. So they set up a number of rules, and that is the reason why you cannot travel from one country to the other with cash in excess of $10,000. You have to declare or risk for future. Okay? Now, gold itself is a currency. It's a means of economic exchange. But we as a country haven't paid so much attention to gold. So sometimes you see our traditional authorities, when they are traveling abroad, they go in royal regalia, a lot of gold, anklets, chains all over. Nobody values them. And then when they are coming back, they come in suit. And nobody asks what has happened to the gold you took away. That's illicit financial flows. Okay, so we've been very lax. So we looked at the gold sector in terms of some of these weaknesses. When somebody applies for a gold trading license, for instance, what kinds of due diligence do we put them through? And are they adequate in ensuring that we contain? The establishment of Gold Board itself was meant to deal with the problem, because previously, anybody at all in this country or outside the country come in and apply for a license to trade in gold. They can also apply a license to export the gold. Now, these people are not Ghanaians, so when they export the gold, the dollars don't come back. It stays in their countries. So it deprives Ghana of the benefits of the gold trade. Secondly, studies we've done shows that even though today, as we speak, the small-scale mining sector contributes about 52% of national gold production, they contribute less than 1% to the sector's revenue because they don't pay royalties. They don't pay corporate income tax. They pay next to nothing. In fact, even ground rent, they pay one off when it's supposed to be renewable every year. The Office of the Administrator of Stool Land has indicated that at the inception of their mine operations, they will come for and pay the ground rent, but they don't come back to renew, and that's it. So they were even thinking about a typical mine life will be for small-scale miners will be about 5-10 years. Let them pay a lump sum. So if they don't come back, you still have captured some benefits from the extraction. So these are all some of the challenges and the weaknesses that we've been trying to deal with, working with the Gold Board and then other allied agencies. And the first step was to mediate, because I spoke to Financial Intelligence Center personally, bringing some of the risk to their attention. They said, we've been trying to convene a meeting with the Gold Board, but it has been impossible. I said, no, you have to work together to ensure that we deal with the vulnerabilities in the gold sector with respect to money laundering and financing of serious organized crime. So I spoke to Gold Board, and so we have no problem working with FIC. In fact, we were oblivious, we were not aware of these risks that you are bringing to our attention. So what should be the next step? The next step was to propose to the UK Ghana Gold Program that we convene a joint meeting between the Gold Board and the Financial Intelligence Center at the very highest level, at the level of the chief executives. This meeting was convened at the Holiday Inn, and we took a look at the law establishing the Gold Board. It had deficiency in terms of our compliance with our international obligations, including even the OECD's guidelines on responsible mineral sourcing. And so we thought, hey, we'll flag these weaknesses for future amendments. But for now, what we can deal with is your operational instruments. And these included application forms, buyer selection criteria, and pricing policy. And we've been working for the past year or two with the Gold Board to address these issues. Now, let me move in quickly and indulge me to address this bit about Gold Board losses. Before Gold Board entered the market, there were already established relationships between foreigners and our local miners. These foreigners provided mining support to our miners in terms of finance and equipment. So you have an Indian, a Chinese, or whoever, a foreigner, a Malian, Burkinabe, who buys excavator for a Ghanaian miner, provides him with money for operations, and then with understanding that the gold they produce will be sold to him at a discount to recover the cost of his investment. Now, here comes Gold Board. You've not provided any support to the miners. Okay? You've not provided finance, you've not provided excavators, and you want them to sell the gold to you. They won't sell the gold to you. They will sell the gold to their financiers. So Gold Board had to come in and say, hey, I want to buy the gold, I'll buy it at no discount. Because you are selling it to the foreigners at a discount, but I will buy it at zero discount, so you get the full international market price. Now, if you're a trader and you went to your wholesaler and bought your goods at a unit cost of, let's say, 10 cedis, and then you come and sell it for 10 cedis, know that you are incurring cost. How do you cover your transportation costs, your staff costs, your utility costs? All this amount to a cost that eventually some accountant will tell you is a loss. But in actual fact, it's not a loss. It's a cost of trying to undermine the illegal market so that you can take control and build trust with the miners while you set up a mechanism for providing the support that the foreigners provide to our miners. And I'm happy to disclose that as we speak, the Gold Board has created a whole directorate responsible for providing mine support services to our miners. And the intent is that the very things that the foreigners did to take control of our market is what we are going to do to undermine and clear them off completely. In the meantime, the Gold Board has established a special task force to ensure compliance with the rules. The rule says that if you're a foreigner, you cannot export gold. So if you are found in possession of gold, one, even for trading, you cannot unless you have a license. So you are found trading or in possession of gold without the requisite documentation, you'll be arrested, and they've established a specialized tribunal for fast-tracking the trial. So you'll be arrested and tried. So there is a compliance bit, enforcement, and then there's also the carrot bit, where we are trying to provide support. And I think going forward, the future can only be bright. We'll be able to address the issues of illegal activities in the small-scale mining sector. Now, if you look at the Gold Board Act, I think Section 42 or so, requires the establishment of a traceability mechanism to ensure that we actually buy only from legitimate sources. As a result of that, the UK Ghana Gold Program sponsored the Gold Board, a member of Parliament, a member of the responsible small-scale whatever mining, they call it ComsDev, right? Sponsored representatives from these institutions to a peer learning visit to Tanzania. Tanzania has a very unique arrangement for dealing with illegalities in the mining sector, a centralized market for gold trading and all that. And then now they are introducing centralized processing facilities, so that if you're a miner, you don't have money to build your own processing facility. In fact, you don't even need to do that, because the centralized processing facilities are delivering up to 96, 97% gold recovery, while the rudimentary facilities that the miners used to have are delivering about 46% recovery. And so I asked some of the miners, look, in Ghana, we introduced 3% withholding tax, and that led to a sharp decline in our gold exports. There was smuggling, massive, from about 37% of national production to 3% of national production. That's how sharp the decline was. Our miners are not ready to pay royalties. So how come you folks readily line up at the market with your gold to sell to the state? And they said, one, the state has given us support. We can find ready market for our gold. We don't need to go roaming. We know where to take our gold. But more importantly is that we are getting some extension services support for Staminco, which is a state mining company, and some private sector central processing units. So we are recovering more of our gold now. And so if you were paying, the royalty is 6%. And so if you are paying 6% on about 46 recovered gold, and now you can recover as much as 96, you don't lose when you pay the 6% royalty. And so that is the motivation, the incentive. So we took them to learn all these things. I'm happy again to disclose that the Gold Board has decided to adopt that model, which involves a chain of documentation of custody of the mineral, that's gold, from the mine head to the market. So it's just like the way you deal with your car. The original owner will have the car papers, but and for the mining, it will be your license to mine. Now, when you sell the car, what do? You do a change of ownership, and then you pass on all the car papers to the next owner. The next owner will also pass it on. It's a similar model. So you are able to document that this gold came from a legitimate source and has ended up with Gold Board and heading to the international market, using the chain of custody that accompanies all the transactions along the value chain. And that's where we are heading. So basically, I want to do, and then I'll come to look at the Bank of Ghana sales quickly. Because some have raised concerns about Bank of Ghana selling or depleting our gold reserves. And to say that the reason we keep gold as a reserve is because it's a safe store of value. But more importantly for every central bank, you don't put all your eggs in one basket. Today we are enjoying over $5,000 per ounce of gold. It won't remain the same, exactly. It's coming down now. It will remain the same. So for a central bank, you need to have a good forecast in terms of the trends, and then cash in quickly when the prices are very high, and then you sell. Now, as the prices drop, you accumulate. Okay, you do this in the absence of a stability framework within a centralized management of your mineral resources. In the petroleum sector, we don't need to do what the central bank is doing because we have what you call a stabilization fund. How does it work? When prices are good and you realize more revenue than you projected at the beginning of the year, you put the excess revenue in the stabilization fund. Then on a rainy day when prices decline, you go into the stabilization fund to take money from there to balance your budget. It's the same way the gold sector works. But in the absence of such a framework like the PRMA, you rely on the central bank to perform that function for you. So it's normal for central banks to sell gold when prices are high. So if you can't find your gold in gold bars, please look for it in dollar assets or other currency. Must I not be so? So your gold is not missing, okay? It's just been transformed into other assets. And that's the way central banks perform. Thank you.
I'm happy I said it.
Thank you, thank you, thank you. I think we should put our hands together for Dr. Mantia. One, he's even answered part of the question of Raymond, which was about what would it take to, create an industry around, the gold process and issues. Now, this is what I'm going to do. If anybody has a comment or a question, I'm going to allow you to come in. If you don't talk, then I will point you out.
So,
Yeah, Raymond wants to come in quickly. Good.
Yeah, but in the process of thinking the way you are thinking now, is there already an estimate of the quantum of jobs that could be created if you follow this process and intentionally? I know we were just discussing with Mabel. Right now, the focus is on stabilization and forex and reserves. But I'm wondering whether there has been any mathematics around what's the size of job creation that could come out of this new thinking on how to deal with gold as a resource beyond the forex. Thank you.
On the small-scale mining sector, we see recent efforts to add value by entering into partnerships to refine our gold. So that's the first point. This country has no reason to export gold bars, refined or unrefined. We should be exporting jewelry. When you export jewelry, one, you are adding value. And so a small amount of gold will fetch you much more in terms of forex returns. Two, as you establish the jewelry manufacturing enterprise, okay, you create the enabling environment. It should be private sector led. The companies that add value will be paying taxes to the state. The workers who work in these enterprises will also pay personal income tax, isn't it? Yeah. And so that is how you multiply the benefits from your gold. Currently, there are no estimates. But in terms of policy direction, that is where we are looking at. So the Gold Board partnership with Rand Gold and Gold Coast Refinery, something that started in 2015, but was curtailed because we went through a political transition. And then instead of the new government continuing that process, they set up a questionable structure, Royal Gold. We tried looking for in which Ghana has 20% stake.
Yeah, in that.
We have been using beneficial ownership law to look for the owners of the other 80%. We can't find them. They are ghosts. And this has been made public. And no member of the previous government has been able to tell us that these are the beneficial owners. But it's being fronted by an Indian company that has no track record in gold mining. Its only track record is inquiries. Okay? And they abandoned their old arrangement and then went in for Royal Gold. It makes sense, therefore, for the new government that started conversation with Rand Refinery and also Gold Coast Refinery to go back and continue with the conversation. So at least now we know we are heading somewhere. I'm very happy about the involvement of Rand Refinery because Rand is a LBMA certified refinery. Now we want to see a movement toward the next step, where some of the refined gold will feed into Goldbot's rebranded jewelry company. But again, we want to ensure that Ghanaian individual jewelers who until now, or even before the gold boom, were depending on scrap gold, okay, that were left family inheritance and stuff like that for their jewelry. And then as a result of the, what do you call it, the gold boom, they started having access to small-scale gold. But because we didn't have very good refineries, you see that our gold jewelry are not as luxurious as you find elsewhere. Okay, so we want to ensure that we support these small gold jewelers to be able to acquire equipment, okay, maybe link them to credit facilities so they can improve. So this country becomes the hub for jewelry in West Africa. We'll become the Dubai of West Africa. I've suggested to the Gold Board that, look, we want to see a gold festival once a year in Ghana, where people from all over the world who want to get married can come in and buy jewelry. Okay, and we can link that to our cultural festivals to promote tourism. So we earn additionally from the tourist industry. Thank you.
I told you that he's like the Gold Board himself. I told you. So that is Dr. Mantiao, who has laid bare all the issues. Let me bring our lady.
I will quickly make a disclosure.
Yes, please.
These are issues I've been working on almost all my life.
Yes.
I've been chairing the Ghana EITR for decades. I worked with the World Bank in between 2009 and 2014. The World Bank set up an extractive industry advisory board in Washington, and I got onto the board, advising the bank on its lending policies. I also was the lead consultant for the gap analysis for the Africa Mining Vision, which seeks to, among other things, add value to our mineral resources. I did this for the UNDP in support of the Minerals Commission. So this is something I'm very passionate about. And I've been engaging also the Chamber of Mines. For a decade, I've been a member of the Mining Industry Awards, and we are pushing value addition, local content, and all that with the Chamber as well. Unfortunately, we have a list of 56 or so items that are required to be procured from within the Ghanaian economy. But what the Ghanaian businessmen do, and the women, they go to the companies, they get the contract and head to China. Okay? Meanwhile, we had an ambitious industrialization program. You remember it? One district, one factory. Yes. But it was in no way aligned with the local content opportunities in the mining sector. Something as basic as activated carbon produced from coconut shell and palm kernel shell for extracting gold has to be imported. The last time I looked at the table of the typical spend of a mining company, I realized that the greatest value was in local procurement. Tax is at the bottom. But we've abandoned, and in fact, let me refer you to a study undertaken by the Ghana EITI. It's called the Non-Fiscal Revenue Pathways to Value Optimization in Ghana's Mining Sector. And it articulates clearly that we are missing a lot of the opportunities. If we can capture even half of the opportunities in local content by building the manufacturing capability to take advantage of them, we can even forget about taxes and we'll be fine. Thank you.
Well, okay, thank you. So let me start with my lady there, Mabel. So I'm going around the table and then I'll come back and then set the stage for the next aspect of the discussion. Okay, Mabel, yeah.
Thank you very much, Norvan. I think Dr. Mantiao has made my submission limited because, actually it's great insights and tends to calm some of the pressures we have on our minds. Because before we went on the break, I was wondering why is the conversation or the benefits of gold is centered on Forex. I think the Forex should not be the paramount focus. It's like everything we are doing, a complementarity, so to speak, at the end of the day. But if we are talking about benefit capture, the Forex revenue should not be the focus. Because when you look at the various revenue streams from minerals, I don't see Forex as part of one of the revenue streams for the Ghana government. So, and also some of the things that Dr. Mantiel has looked at, the upstream, because I believe that a lot of the time, government intervention, even including Gold Board, has been addressing the downstream issues, the trading issues. But then, if we get this much, everyone has to pay something. Whilst I agree with you, Doc, that tax revenue is one of the least that as a country we can make in terms of revenue, at least if this is what we have, it should be implemented to the latter, such that we make the most out of it. A study that we are currently doing, and we used some study from the EITI, which indicated that at the time of the report, data from Minerals Commission was about, of licensed small-scale miners, about 109. Only 9 of them were registered with the GRE. And out of the only 9 were registered with the GRE, it means the remaining 100 companies are paying nothing. In terms of government is making nothing out of them. And Dr. Ashigwe mentioned, what is the cost? We are spent in terms of cost in maintaining the sector, even the environmental cost is so high. And if we get nothing from them, then of what use is the sector to us if it's only to report that it's 50%, it accounts for 50% of gold output. And what does government get out of that 50%? So, and when you look at the data from the EITI, royalties is 0. It's not like it's small, it's 0. And only 8 out of the 9 pays CIT, something very little. And I think what the government was making a lot from was from the withholding tax. And we all know usually indirect taxes tends to fetch us more. And now with the issue of smuggling, that has disincentivized government continue with the withholding tax. So with all the things that Dr. Manti, I don't want to repeat it, my concern was that policy intervention should not be focused downstream, because once it is focused there, we lose out on the fiscal contribution from the small-scale sector, and where that's where the benefit capture should not be focused up, down there. If we really want to benefit or optimize the revenue chain from our small-scale sector, we've reduced the competitive to small-scale because things are easy to handle at the large-scale sector. And during our engagement, one of the issues that came out really is the issue of identification, which is making it difficult for the GRE to even trace and conduct proper fiscal assessment to be able to apply the right taxes and get what we are supposed to get from our gold value chain. I want to look at it as value chain, right? Right at the mine level. But if we don't, to be able to apply the right type of fiscal distance, what is very important is very accurate production volume. Is basic. So once as a country we are not able to account the accurate production volume, then it becomes problematic for GRE to apply the right kind of taxes or the right kind of fiscal assessment and collect what is due the state. Currently, as we have it now, even the 50% that has been reported is based on export quantities. It's based on, it means that we are Doc talked about jewelers. How much was retained in the country to the local jewelers? How much are we accounting for that? So it means that there is a lot being lost even before we get to the point of export. By the time that we are able to formalize proceeds from the small-scale sector, a lot is already lost, because those that go to the jewelers are not accounted for, those that passes through the various the smuggling. But I see interventions are focused on curbing smuggling other than looking at the entire value chain upstream, tracing to the very mine level, And Norvan, just to and just 1 minute to end quickly.
Yeah, 1 minute.
Yes, the traceability. I just want to find out from Doc, how is the Gold Board working with GRA? Because it's very critical that intervention should not be implemented just to serve the agenda of Gold Board. But how do we consider in the interagency coordination that we leverage on Gold Board to get the right kind of data that GRA can rely on to do a proper and accurate fiscal assessment to, in the interim, get the right kind of fiscal contribution from that sector. Whilst we look at the various economic linkages, Doc has mentioned, my concern is our level of monitoring and enforceability. You use the case of the petroleum. Yes, the stabilization, the law is there and all that, but at the time that we needed the stabilization fund to work for us, it couldn't. During the COVID period and some instances where prices were skyrocketing, that the government could have relied on the stabilization fund to stabilize our prices, to cushion Ghanaians and also stabilize our budget. The Ghana Stabilization Fund from the petrol could not serve that purpose because of how it's being maintained, because of how it's being handled. So it's one thing setting up a framework to say we've ring-fenced this, we've ring-fenced it. How is it handled such that some of the discretionary powers given to a minister to say, I have capped a stabilization fund, I have capped a ring.
Okay, be wrapping up for us.
Yes. So what I'm saying is that all these are very good interventions that the Gold Board is making, but until we ensure that we have proper rules that apply to the management of these funds, we will go back. It will be there. We will use it to take the bosses to qualify for some grants and some global aid somewhere and look good, but yes, we'll come and we'll still not be able to say much about our minerals.
All right, points well noted. I know. Thank you. I think you've made your point. Let me go to Dr. Kenashibe. So this is really looking at the areas of, as I indicated, the reporting reforms, the legislative changes, because Dr. Mantea talked about the fact that they have already identified certain amendment that in future they want to do to the Gold Board law to ensure that it properly deals with all the vexed matters that we are raising here. And he talked about the value chain and all that. I want to hear from you. I don't know if you have some comment on what Dr. Mantea has said before we move to the other area. I'll come back to you, Chief. Yes, I'll come to you. That's GII, and then we'll get to TI Ghana. Yes, yeah, and then yeah.
Well, thank you very much. One of the things that I have said to the Gold Board CEO is that the errors, the sins that we committed with the Gold Coast refinery, we should not do it with Royal. Yeah. We should not. Even if we have 20% in there. And again, we need to find out who the owners are. We need to get that. But they also have LBMA, a partner, an LBMA partner that they're working with. So let's make sure we don't let these assets sit here and just rot. Because what we did to the Gold Coast refinery, it's unthinkable. And it's one of the things that I am hoping that our politicians learn from. We need to be a lot more embracing, and build our institutions. So it's important that, and again, I think that move that has been done with, especially bringing Rand refinery into it, it's a positive step. Again, it's the fact that we should not stop. Because you see, refinery does not really add much. It doesn't create a lot of jobs. It does not, in terms of even the margins you make. Again, so it is what Dr. Mantea is talking about. So again, it's not just jewelry. We need to look into the whole electronics chain and all of that, what gold can be used for. And we need to be very, very intentional about how we are going to get that to happen. But it's really also important for the Gold Board, the same way they are helping us to deal with the issues of smuggling. And I'm hoping that with Rand Refinery coming in, the whole thing about responsible sourcing, it's very important. Because currently the damage that, unfortunately, the Galamsey challenge is still there. So here.
You hold that for me. I will come, because that's the next area I want us to really go.
Okay.
So let me pick a guy from TI Ghana.
Okay, thank you very much. My concern and question will be to Dr. Mantiel, concerning his presentation on, the overall thing that he talked about. We have worked some time together in this space, from Jacob's time to this period. And so my concern will be the issue concerning Bar Rock, the aggregation systems, and what really entails the choosing of a particular entity in that space, and what really comes to play when we talk about, saying gold in that area. We were working on the licensing issues before this government came into power. So what is the update in that area? And then why is Bar Rock being chosen to be the main aggregator in that space? And then also what accounted for the loss? You stated that particularly, but how are we going to work around all these issues? That is the main concern. And then number two will be the responsible mining, and then cooperatives, responsible cooperative mining and skill development. You talk a lot about creating jobs in that space. I think government set this up to, take over the Galamsey issues going on. And so how are they working together with Gold Board in that space to make sure that we are also building skills in that area? That is the two things I want to talk about.
Okay, let me just remind those who are following this discussion, both on the social media handles and then on Zoom. It is the strategic policy session on Ghana's gold trade and economic recovery. And we've dealt with a lot of issues. So, Dr. Mantea, I think he's also brought in the issue of responsible mining, and that really ties in as to the transparency mechanisms that are being used by Gold Board. That's how come he's raising the issue of Bar Rock right now. And then also the governance structure changes that we're seeing in Gold Board. How is that affecting? And then the third one will be, now let's set the stage very well, responsible mining. Galamsey, let me use the right word. Galamsey and its attendant issues. How are we ensuring that the gold that we are buying is not coming from these Galamseyers? How are we ensuring, you want to buy them, equipment for them to work? How are we ensuring? Because I know it's not the Gold Board that gives them the license to go there and do the mining. So what is the interagencies, especially with the Minerals Commission, with the EPA, ensuring that these guys go on the ground, they mine responsibly, they are not getting into our water bodies, because we are at risk as a nation. Dr. Mantea.
Right. For those who follow my work, I'm more of a process person than anything else. And I ensure that in the work of state institutions, they follow due process. So as part of the support that the UK Ghana Gold Program has been rendering to the Gold Board, we try to vet their aggregator selection criteria. And we also encourage Gold Board to make these public. So if you go on the Gold Board website, the aggregator selection criteria is there, spelled out. So if you go and look at it and you think any aspect of it has been breached, we can talk about that. I wasn't part of the selection process, so I wouldn't know how Bawa Rock won. But I want to believe that the rules were applied leading to Bawa Rock's selection. And so that is what I'll say in respect of that. And again, all the buyers, including also the aggregator, have their information published on the website, very detailed, and the duration of their license and everything is there. So it's part of also trying to make Gold Board very accessible and also responsive to citizens' need for information. If you think there is much more to do, please write to the Gold Board, and I'm sure they would act on it. Yeah.
I think the CEO was on TV, and he was asked that question.
And he indicated that, one, the relationship between the Now Gold Board, which is PMMC then, it goes way back. It's not, I mean, I think the information that came out was like, oh, it was a company that was just formed recently. And they have running contract that goes all the way to, is it 2000 and what? With the PMMC for way back. I mean, more than 10 years. Then also, what make them qualify? One of the criteria to qualify them as an aggregator is the capital requirement, which is a high ceiling. So they look at all the companies. I mean, so the people were questioning how they were able to do that. I understand some syndication or whatever, but understand a lot of the companies do not meet that criteria. That's how come they are working under what do you call it? What's the name of the company again? Baroque. So that is the little information I want to add based on what I heard the CEO explain.
Please take note, we are not from Gold Board. Yeah. So we are just telling you what we've heard. And I think that you can write, even using the RTI law, to Gold Board to, get that information out of them. Yeah.
And TI, you have a record of doing a lot of investigative stuff.
Yeah. In respect of the cooperative mining thing, this is building on the previous, what we called the community mining. If you look at the community mining, it was actually guided by a manual. Find time and read the community mining manual. You can Google it. Beautiful document. However, when it came to implementation, it lent itself to political capture. So party people, in fact, we called it community mining, but it wasn't community mining. It's party influential people who took the license and then employed people from the community, a few people. More of the workers came from outside the community to mine for that political individual. This has lived with us for a very long time. Let me remind you that between 2009 and I think 2017, thereabout, this country implemented the Natural Resource and Environmental Governance Program, which was aimed at reducing illegalities in the mining, forestry, and environment sectors. At the end of the program, illegalities in the mining sector had more than doubled. And I happen to have joined an international panel to review the end of project report. And the panel came to the conclusion that the reason illegalities in the mining sector more than doubled over the period of the implementation of the Natural Resource and Environmental Governance Program was vested interest. Vested interest in the sense that those who had the power to stop the illegality were either beneficiaries of the illegality or were themselves complicit, perpetrators of the illegalities. And so it happened that this found its way into the community mining. So the same people with vested interest got in there and spoiled everything. Something that was supposed to be a source of livelihood for people living in the community became something that benefited individuals with powerful political connections. So this government, during the lead up to elections, promised that they would reform the whole concept of community mining and make it cooperative. The idea was they were going to formalize it, and you see members who form the cooperatives, and they will have arrangement for sharing the benefits of the cooperative. So this is where we are headed. Now, I know the Gold Board has set up a department that will interface with the community mining. There are plans to provide them with equipment, finance, and also, central processing facility. This discussion has just begun. And recently when the World Gold Council came into the country, I think they are also designing a package in a multi-country pilot. And one of the things they are offering us is also this central processing facility. And so there's conversation going on between Gold Board, the World Gold Council, and the Cooperative Mining Scheme. Early days yet, but I always encourage people, if you have ideas in terms of how we can improve it, please share it with the Gold Board and share it with me. Some of us, at least when we knock at doors, they open because they know what the consequence will be if they don't open. So they open, and that's how we are able to influence policy and practice changes. Thank you.
Yes, Dr. Manto, where are the assurances that the mistakes that happened in the past, this idea of capture, which I think is our biggest problem in this country, this idea that we have really, really good laws and really, really good strategies, but implementation doesn't happen. And I think you've hit the nail on the head, that even when we have these solid laws, because of capture, they don't produce results. Because it's not a lack of capacity or knowledge. So even when you hear that you're going to learn how some other countries do these things, you all seem to know what to do. So what are we doing differently to make sure that this capture does not impact the future of this policy so that we get it right this time? What is different? The same politicians are still here. Are we adding anything to change the equation to make it produce different results? Thank you.
In my view, the weakest link in our push for political accountability in this country is lack of support and availability of funding for public interest litigation. I've grappled with this issue during my days at PIAC. In my days, some 2 billion Ghana cedis was unaccounted for. And those of you will recall, it became a tug of war between myself and the then Minister for Finance. And it continued till I left in 2019. Somebody at the ministry told me, Doc, you are wasting your time. The whole strategy is to play this game with you. Today they said it's in the Treasury main account. Tomorrow they tell you it's here. You go there and it's not there. They are playing this game with you slowly, slowly, till your tenure expires and then you go. And nobody will talk about it again. And indeed, when I exited, nobody talked about it again. If I had access to funding, I would have gone for a public interest litigation and continue with the struggle. But that would be at my own cost. And for a poorly paid CSO activist, it's a gamble. I can afford it. So I left it. Then in 2022 budget, I saw in the budget statement that government had reported that they used that 2 billion Ghana cedis for COVID mitigation. Two issues arise. If indeed they use that money for COVID mitigation, what are the specific interventions and what are the breakdown costs? Two, if indeed they've used the money for COVID mitigation, did they go back to Parliament to vary the use of that money? Because these are monies that have been duly approved by Parliament, and that the executive couldn't vary their use without going back to Parliament to vary. So I expected the then PIAC to follow through. In fact, I alerted them, but there was lack of interest. The then chair said, don't rock the boat. You don't want to make the government unpopular and this kind of stuff. So we left it. So to date, it has gone unanswered. I use this to make the point that without a focus on public interest litigation, where citizens can go to court and seek mandamus to get the court to order people to do what they have to do or to account, won't go very far. The Integrated Social Development Center, ISODEC, that I used to work with, identified this weakness and set up this Center for Public Interest Law. We did a lot of work in this area, pushing community rights. Incidentally, the first director is now the Attorney General and Minister of Justice of this Republic. But these days, public interest litigation has gone down.
I'm just trying to push on this envelope of policy because we are here talking about something that, but I think it's also useful to take advantage of your intellectual power to look for solutions. You know, right now you have the royalty law, that is a bill that is under consideration.
I want to make a comment about this issue. About
So my question is, before you come, Doc, is should we, as government creates this thing, should you have also a requirement for a fund to do these kinds of things? You know, it will be, you know, in the United States, they have options for a public defender. If you cannot defend yourself, you go to the public defender to help you. Should we start thinking about, because who gives civil society money? Like, where do you get the money to take anybody to court? Should we be creative enough to think someone should have this? It's not the bank that is going to give you, or the Swiss government, or the FCDO. It should come from the resources of your country. Is that something that should start exercising your minds? Government should actually set these kinds of things to support accountability.
Yes, I think government should do that. And I would say government has been, in past times, the biggest beneficiary of citizens' efforts in this regard. I recall when the Ghana Atuabo gas processing facility was being constructed. I had information of some transfer pricing manipulation around procurements for the project. I needed to get corporate company information on the provider of logistics and equipment for the project in Ghana. My information was that that company was registered in Dubai. I had to travel to Dubai to obtain information about that company. Eventually, I managed to establish the transfer pricing manipulation, and it led to the recovery of 16 million cedis in additional taxes from Sinopec when it was confirmed. What happened was that Sinopec had registered this company, and my checks confirmed that the director of the company, the general manager of the company in Dubai, bore the same name as the general manager for Sinopec in Ghana, which meant they were trading with themselves and fixing prices. Now, when you hike the prices, your cost goes up and your profit margins go down. So you don't pay tax, or you pay very little tax. This is what was happening. As a result of that personal intervention, the state gained additional 16 million. But unfortunately or fortunately, I didn't get anything, but I'm happy the money went to the state. So I use this to make the argument that the state stands to benefit when they set up a fund. If you are really committed to fighting corruption and making sure that rule of law works, then you set up a fund to support groups and individuals who want to go to court and ensure that the law is enforced and wrongdoing is stemmmed.
Okay, so Dr. Shibe, I mean, I bring you in here bearing in mind that what must stop immediately as far as this whole discussion we are having is concerned. And that brings in the Galamsey a bit.
Well, so thank you. But before I even get to the issues around Galamsey, it is about responsible mining. The challenge with the cooperative mining, community mining and the cooperative mining, there's been some good attempt to be able to resolve it. But as Raymond said, if you don't deal with who are the owners of the cooperative mining, you will not solve the problem. You see, the firefighters are the arsonists when it comes to the issue of Galamsey. It is the people we have put in charge to fix the problem that are the problem, that are causing the problem, that are giving the Minister for Lands and Natural Resources the challenges that he's facing. That are the reason why your MDC, your MCEs and your DCEs, say that they are not able to fight it. So if we don't have a way in which we can identify who are going to be the owners of the cooperative mining, we'll be in trouble. So it has to, and it's one of the, if you read a piece I delivered on the day, that fateful day that we lost the 8th, is the point I made, that we need to be deliberate about the ownership of the community mining, the cooperative mining. It has to be, you need to do it in such a way that you need to identify who, there are various constituents that need to be in there, and it has to be by law. you need to take out the discretion. Because see, when you put any discretion in the house of the politicians, it's like the way we say in our language, you give more money to a cat to take care of more money. You know, they have shown us consistently that they will abuse it. You know, so we need to be very deliberate in that. For me, I don't think that that entity should be registered as a cooperative. It should be registered as a company limited by shares, so that you know that there are people who are responsible. So when the thing goes east, you are able to hold them accountable. And so for me, I think that's some of the places that all of us need to stand up and talk about it. Because unfortunately, currently, the arsonists or the firefighters, they have a merger between the political class. You ask yourself, how long does it take to import an excavator in? Galamsey has continued because those who were doing it in the past now have minority shares, and those who have come into power now have majority shares. So they are, you know, together. So we need to find a way where all of us, as civil society, as citizens, ensure that, you know, we have a way in which we can identify those. And one of the challenges with this whole issue of Galamsey is the organized criminals who are behind it. The people in the communities who want to mine. And so for us at the chamber, one of the things we are proposing in support of community, cooperative mining, is coming up with a framework, an industry framework that enables us to empower the people, the chiefs in the community, the people in the community, those who currently have, you know, land rights. There are people who might be farming on the lands and all of that. Get them to also have a stake in it. The DCs, the MCs who are in the place, find a way in which you can bring entities like UMAT, you know, to be able to, and UNER, to be able to provide professional. Dr. Mantiao talked about Tanzania, the services that are provided. So you get people who are responsible, who are licensed by Minerals Commission, under the Engineering Act. They have a stake, and then you hold them because they are supposed to be supervising the people in those particular places and supervising them. The interesting thing about doing responsible mining is that it's expensive. So the 100,000s and things that government wants to put in it, it won't cut it. It would require a lot of resources. And I'm hoping that the Gold Board, for example, would, and again, the Gold Board CEO gets it, would be able to bring some funding in there, and so that we'll be able to design the mine, make sure we're doing prospecting, design the mine in such a way that these mines can take these, you know, those who are mining in the 5 years, 10 years life of mine, so that once they are benefiting from it and doing it responsibly, without all the diseases, all the damage that are happening there, and they are doing reclamation as it goes along, then they will be able to cut out these organized criminals who give them resources, and they take 85% of the benefits that come in and leave them with only 15%. So entities like the World Bank and all of that, there's a lot of work that we need to do. Because to tell you the truth, the stick is fine, but it's not the solution. The solution is the carrot. How do we get the people who are in these communities to be able to mine and mine responsibly? And again, that goes still into the role of the Gold Board. Gold Board, excellent in dealing with smuggling. Once they start doing responsible sourcing as well, then they can go back and say, if the source from which you are coming from is not correct, we won't buy the gold. Not only would we buy the gold, we seize the gold, and then we destroy it, and then we punish you. You know the reason why the Tanzanians, they go in line? Apart from the fact that there is a good carrot there, there's a good support, they know that the stake is there. They know the implications of it. So the same way, you see that Gold Board, they don't do what the Minister for Interior was doing, where they arrest and deport. When they catch you, it doesn't matter who you are, the Gold Board, they arrest you. So if the same thing can be brought to on the people who are mining illegally and working on the issues around traceability, that's why I'm happy with the Rand refinery coming in, because traceability is important. You go into places like Mongolia. If you bring their gold, they are able to test to see whether mercury is in it. And those are beginnings of the way we need to be able to do it. One of the questions I would want to ask Dr. Mantiao is what has happened to the task force coming in? Are they in here? Because it's a major risk for all of us as Ghanaians now, in terms of the AML and in terms of what the gold is doing. So I think we should all be interested in resolving this issue of illegal mining, irresponsible mining, and now there's a major challenge that we should all be afraid of, the use of cyanide. They're bringing people from Burkina Faso. They're doing what they are calling in situ leaching. The last time there was a community that would have been wiped away, the only thing that saved us was that the pump on the borehole was faulty. So by the time the EPA went and did the test of the borehole, the level of cyanide in there was so high. But you know what had happened? The people in the community were going to get some people to come and fix the borehole. So if they had fixed it, it would have wiped away all of those people. And there's still a lot of those people doing that in the communities. You see, so we need to be very intentional about this responsible mining, all of us supporting it, but making sure that who the beneficial owners are very clear. And then making sure we hold people accountable and then empower the communities. Like, let me to land. There's one of the places where Newmont is doing a project. You know what? The community people say they know themselves that if they don't take charge, the politicians will come and spoil the thing for them. So they are taking ownership of it because they want to make sure that whether NDC comes today, MPP comes tomorrow, this project will continue. So we all need to own it. What is happening is learning that we have done from community mining to responsible mining. Let's get involved and make sure we clean up that particular act and make sure that it's in the implementation. Make sure that it's implemented properly and we don't get these firefighters who are arsonists to take ownership of it.
In fact, that answers the question of what should Parliament demand oversight on. He's been very clear. And Dr. Mantiao, I mean, he's also suggested a few things that has to do with the fact that we don't have to do the corporate. Maybe we should consider limited by share, so we can know the ownership. You understand? The people behind it, because and that also takes out the discretion bit that the politician has and decides which way he wants to go. And as you indicated to us, per that panel work that you guys did, you got to know that the politicians who are in charge really have an interest. Either they are deep inside themselves or they are the ones sponsoring people and are the beneficial owners of what was happening. I don't know if you want to comment or try and answer some few of the issues, and then after I'll come to you, and then I
want to add my...
No, wait, I haven't come to you yet. Dr. Mantia will speak, and then after that I'll go to the lady, and then I'll come to you, and then I will close. Okay, Jennifer will come in, and then we'll call it a day. Okay? So I'll come to you. Or you wanted to say something before my answer? Okay, fine. Please.
Are there any questions from those online?
Please go ahead whilst we try to see if we can get any questions.
So Doc, before you come in, my issue will be, for now, minority has raised a lot of concerns from where aggregators get their gold from. And so how do we know, and how do I tell my people that the gold we have now is from genuine sources and not from what the people are talking in the news? I mean, what should be the way?
Well, you know, when he said the minority have raised questions, when they were in majority, they didn't have questions. Sorry, I mean, they didn't have questions, but now they have questions. But it's fine. I mean, that's how we build a nation. So, you also have a question. Okay, let me come to you, my lady. Yeah. Since it's a question, I think she should just bring it in, and then please, can you push the? Forward. Thank you very much.
Okay, thank you very much. My name is Eugenia. I'm from Action Aid Ghana, and my question is the Gold for Reserves program. Do we have a timeline for this? Because it looks like it's an open-ended program, and they lend themselves to risks. Risks for now, risks for future, and all that. Secondly, I think a lot has been said about what is being done to ensure that we de-risk all this we are doing. But as I sit here, I feel we haven't spoken much about how do we ensure that these risks that we are curbing at the macro level, how do we ensure that it is not passed on to communities, it's not passed on to individuals? Because at the end of the day, everything that is being done affects me first as I sit here, then the communities as well. Yes, we are buying. We've put in very brilliant policies. We have a lot of artisans or miners now bringing in their gold because they'll get premium. But there's a risk being passed on to the communities, because if I know I'll bring 2 today, I will get 20,000. I will do whatever I will do to get 30 tomorrow. And how am I reclaiming, or how do we ensure that these risks that we are curbing at the macro level are also being curbed and not being passed on to communities? I think Dr. Ashibwe has mentioned some of these risks that are going on in the community. Thank you.
All right. Let me, Jennifer also says she has a question for you. So let Jennifer ask her question. And Mabel, is it that I saw your hand? You also wanted to ask a question? So after Jennifer, I'll pick you, and then we'll have Dr. Mantia and Dr. Kwachi, since there's another question on the gold for reserve issue, to just wrap up for us.
Yes, thank you very much. Before I came in this room today, I had a lot of questions around gold for oil, gold for reserves, the gold board and all that. And yes, Karim, I also listened to Sami Jemfi, when the CEO, when he also spoke, but it wasn't too clear. And I agree with Bright. My question, what I was thinking around the aggregators were, if you are entering into a business, why should the government or gold board fund your business? Because part of the criteria, if you check their website, is for you to be able to raise an amount. So if you are a company, or yes, you are a company and you are in good credit with your bankers, I don't think you would need the state to fund some of these things before you are able to go and purchase, or you are able to go and with the whole value chain that we are talking about. But I think in this room today, I understood from Doc taking the Tanzania bit that the gold board also has to put their skin in the game for people to be able to give them their gold. And also because they are also setting up the mining support directorate, which, well, thinking through from that perspective, then in a way it made sense to me than before when I even heard the CEO speak. One major thing I also want to talk about is the gold traceability, which is very, very important. And I think Doc also gave a very good framework in my mind that just like you buy your car and the papers keep changing, that gives us a very good one, way to trace where the gold is moving from one end to the other. My question to Doc is, are we really sure that that is going to be followed through? And then the paperwork, and there's not going to be any backdoor event anywhere. I also agree with Regina, because part of what I was writing was also about how does the person in the community, or especially women, because some of these things that we all do, whether it is mining, any of these things, the very people that are affected most is women. And some of this discussion, we don't even take them into consideration, because if you affect anything in any mining community, the first person to affect is the woman who is leading a household, because care work will now have to be doubled, because if maybe I have to, like the borehole situation, if I have to just walk 1 mile to get to a few meters to get to a borehole, now I have to walk miles because whatever I have now is not there. And it is the women who are going to fetch the water. It is the children who are going to suffer. So whenever we are making all these policies, can we really consider the community, and most especially the role of women in this whole value chain? Thank you.
All right, thank you. Mabel.
Yeah, thank you very much, Norvan. So my question, I don't know whether it's a question or something for Doc, since when you knock the door, they open, is I mentioned during my earlier submission on the inter-agency or inter-institutional coordination. Initially, I had highlighted the coordination between Gold Board and GRA, such that the intervention should ensure that mine-level production data is actually being able to be collected as part of Gold Board's work, so that GRA can find it easier. The other leg is, how is Gold Board coordinating with the Minerals Commission? Because I think they are the beginning of the problem. When things are streamlined there, it makes it easier for the rest of the agencies along the chain. So I wanted to add, because in your earlier submission, you mentioned the mine support services and all that Gold Board wants to establish to support the actors. But how is the level of due diligence? I don't know if you have it per your association with all these agents, you have that answer. The level of due diligence that is made by the Minerals Commission, for instance, at the time of licensing. You are supposed to bring financial statements and all that. Beyond just the financial statement, how are they able to verify that this financial statement actually represents the financial capacity of the applicant and not just something to collect license and front for a certain foreigner? Or if we are we able to weigh the applicant in such a way that we know that he also has that technical capacity to produce? I think my question is the level of due diligence by the Minerals Commission is critical to address the issue of fronting. Otherwise, the support services, it will be foreigners who will be enjoying it in the name of Ghanaian-owned companies. But before I just hand over, I think one area you mentioned in terms of the job creation was the jewelers. I would want to bring the attention to the side economic linkages. I think that's an area that we can fetch more benefit capture for our good. If we are Norvans, I brought it in because of the de-risking.
Yes, okay.
Yeah.
All right, thank you very much. So I think I'll start with Dr. Kwachi to try and look at the goals for reserve question that came from Eugenia. And then after that, Dr. Mantiao, you have a lot of questions to answer. There's even one from Zoom from Benjamin Isia that I'll ask you as well.
Yeah, okay. So the question was whether there was a timeline for the go for reserves. I believe you are asking this because of apparently the harm that we get, from Galamsey. We are, in other words, maybe you are linking the go for reserves to the fact that it helps to sustain Galamsey. I think that's where you are coming from.
I'm thinking that it's because of to stabilize our economy. That was the main reason why this was done. The program was in place. So I'm thinking if it's a short term, for me, I see it as a short term measure. Yes, please.
Every country does.
Okay, so you came in a bit late because we've gone through that. I thought you were even linking it to just Galamsey. You are talking about maybe it's a short term, could be a short term kind of policy.
Yes.
No.
Thanks.
No. We want to continue to build our reserves. We are now at $13 billion. The reserves as a whole. Gold is a component of it, and 5.7 months of import cover. That is helping to support the CD. That's why we have got this stability for some time. But we need to continue even to build it, higher, because the economy keeps expanding. The needs of the economy will be expanding, and it is because as a developing country, you see, our foreign exchange regime is what we call a managed float. In other words, we try to support the currency, and then it moves from time to time. It is a freely floating. It is not entirely, completely freely floating like the dollar, the pound, the Japanese yen, and the others. They don't need to, support the currency with reserve. They just let the market, take care of that. We are not there yet. Bank of Ghana takes custody of most of the reserves coming into this country. So we have a duty to release it to the market, to support the market. And, your reserves has several components. Gold is part of your reserves. The foreign currency, we hold various foreign currencies, it's part of your reserve. You purchase and hold convertible government securities, it's part of your reserves. IMF allocates some SDRs to you, it's all part of your reserve. It's a pool. So gold is just a part of it. And it is we've gone over it, is an important asset by its nature, to hold. So it is not a short-term kind of, but we'll get to a point where the economy has developed when we may not have to hold so much reserve. We'll leave it more to the market. But we are not there yet. As a developing country, we have a long way to go.
I think that is where I was with your last.
Yes.
Can I just?
Yeah, please go ahead.
I think that was where I was getting at. That was where my question actually emanated
so when we
from.
wrap up, you
Do we
still have the time.
That is where my question is from. Do we have a time frame in mind for this? You understand? That's the thing.
Respond. So as we speak, one of the largest holder of gold reserve in the world today is the United States. One of the biggest after that is Germany, UK, France. Then you can talk about Russia and the rest. But as we speak today, they have stopped. All these countries have stopped accumulating. You understand? They use it for quick trading just to benefit here and there, but they have stopped accumulating. Well, as he said, the economy has developed to a level where you can allow the free market to regulate forex. But we, as we are here, you need some support. So until, as we said, the economy is not even developed, we are still primary, what they call it, commodity exporters, subject to all these vulnerabilities, volatilities of price. You understand? So until we diversify enough and transform, in fact, that is where we need to have economic transformation. Before you can talk about allowing a totally free, market economy. Otherwise, you will always have some form of government intervention, but it must be moderated. That's why we set limit. That's why currently our law says we cannot, the government, the Bank of Ghana cannot finance government that more than 5% of the previous year's revenue. Yeah.
Let me say just finally that as a country, Ghana, we are even lucky that we have so much reserves of gold that we can tap to add to our reserves. Many other countries don't have it. Yes, so it is only proper that we take advantage, and we are talking about even trying to own more of our gold reserves so that we can even use it as a backing. In addition to the other reserve components that I've mentioned, gold is just part of it. Yeah.
All right, so Dr. Mantia would do his best to answer almost all the issues that you have raised. If he's not able to do that within the next 5 minutes, when we close, you can corner him, and then he would, give you more answers or more insights into the issues that are bothering your mind. It's also because we need to make sure that we stay within time and try and close. So,
Okay,
Doctor,
right. So quickly,
minutes.
Madam, the short answer to your question is that this is a long-term strategy. That's it. They were dancing around it, but this is a long-term strategy. Okay. Two, do you know that in this country you cannot open a pharmacy and just sell drugs?
Yes.
Yes. But even if you are not a pharmacist, and you can procure the services of a pharmacist to supervise your pharmacy, you can operate a pharmacy shop. This is an option to what Dr. Ashigbe referred to as limited by shares. Because community people don't have the money. So if you go that route, you'll be cutting a lot of them off. But what you can do is to make sure, and I think the recommendation is to address the issue of who do you hold responsible. So if you can require, just like the pharmacists do, because if anything goes wrong, like a certain drug, it can be dispensed only on prescription. And your pharmacy, whoever is operating the cells, the pharmacy, the supervising pharmacist can have his certificate withdrawn. You get the point? So I asked myself, why can't we have the same arrangement that a registered, licensed miner is recruited, is required to be recruited by a small-scale mine to supervise operations and make sure that these are done properly. before you will be given a license as part of the license application procedure. That could be another way. So for every policy, there is an option. If you think this will be too costly or may have issues, you could look at getting, in Tanzania, is the state mining company that provides extension services to miners based on need and all that. So we could look at that. Again, I hear GoBot should do this, GoBot should do that. I hope we are now recognizing that GoBot is not your usual gold trader and exporter. It's mandate. So if you're going to look at profit and loss, then some of the things that you are saying GoBot should be doing, they cannot do it. But they have a social mandate, a developmental mandate, which will come at a cost. I recall, and let me make a disclosure here, I sit on the GoBot ESG committee.
Okay.
And there was an institution.
ESG is not everybody who knows ESG.
Okay, it's environment and sustainability governance. Right. And I recall there was a state entity that applied to the GoBot for financial support. At a meeting, I looked at the request and I said, oh, you should be mindful not to turn GoBot into a slush fund or a microfinance. We should be careful the kinds of demands we make of that entity. Because we are the same people who turn around and say they are big losses. So my suggestion was that this request, let the applicant go through the budgetary process to obtain the money they need, because it's a state entity. You get some of the things. So GoBot is not your usual. Look, if you know the kinds of demands that are coming to that entity, but I'm happy so far they are able to resist some of these demands and focus on their core mandate. But you cannot focus on your core mandate and leave the communities that produce the gold behind. So there are a lot of social interventions that they may have to do as part of their mandate. So I'm happy this has come up and we are recognizing that this is not your typical type of trading company. Now, a major, when it comes to Galamsey, a major contributory factor was the fact that the Minerals Commission went on a spree of issuing licenses almost everywhere in the country, including places where the Minerals Commission itself did not have a presence. So how do you regulate? Look, as I speak, the whole of the Savannah region, which plays host to a lot of small-scale miners. You are talking about Bole, Daklupe, Tinga, Dollar Power. There's no big mine there. They are all small-scale operations. And yet the Minerals Commission does not have an operational office. They've just recently constructed one, but they've not even opened it. So it is the Upper West Region Office which is responsible for Savannah. Look at the distance. So that was a major challenge. Before the former CEO left, he tried to address that. So they've actually built across the country so many offices. They are yet to open them. And they sent a lot of their staff for training abroad and all that. So building the human capacity to man them. So that is a way of addressing the regulation compliance bit of the small-scale mining. There's a certain dimension to that I think comes from our state institutions with prosecutorial powers. Nana Asante-Hino Otumfuo worked together with Bureau of National Investigations to establish the complicity of some chiefs in illegal mining. Sure. And he distooled them. And what happened after that? Nothing. I won't be surprised that those chiefs have gone into full-time small-scale mining. But properly speaking, our state institutions with prosecutorial powers, the Yoko and the rest, should have moved in and arrested these chiefs and make an example of them. then the other chiefs who are complicit in illegal mining will set up. Nothing has happened to them. So it's also a failure on the part of law enforcement. There was an issue about sourcing responsible and all that. Look, previously, mining had gone on, a lot of it from illegal sources. The benefits went to China, India, Dubai. We didn't get anything. Now we are trying to rectify the problem and making sure that we get at least something for the damage for the environment. But we are not happy with the current situation. And so the law establishing Gold Board says establish traceability because it's the surest way of weeding out the illegal gold. As I speak, I think the Gold Board has narrowed down to a few proposals. There have been so many proposals, including one from a CSO. They actually reached out to me about some few weeks ago, and they reached out to me again this week. That is the Forest Watch. You know, traceability has been introduced into the forest sector, the timber certification, all that. And they think that that model will best fit gold traceability. So I asked them, please write to the Gold Board. They've written to the Gold Board, and they need assistance to follow up. Apparently, they said Gold Board called their office, and they were excited about the proposal. So it's one of the options they are considering. So let us all be patient and understand that something is being done. In fact, I've even advised the Gold Board that convene a meeting to present the proposals that have been brought to you, including the one from the Forest Watch. Let the proponents come and present, answer questions, so that collectively we'll agree on which best fits our current situation. They've nodded, but we are waiting. Then the funding of aggregators. Let me tell you what, we've come a long way. There were times when in this country, only PMMC was buying small-scale gold. They sat in Accra and expected the miners to bring the gold to them. Meanwhile, the Indians and the Chinese went to the mine site and bought the gold and crossed the border with it. You know why it was easy? Because look, our own law even prescribes that the only exit point for our gold is Kotoka International Airport. I don't know who crafted that law. So I am at Dakulupe, next to the border. And you say I should bring my gold all the way to Kotoka before I can export. It won't happen. And so the border post at that part of the country has no metal detectors, let alone gold assessment equipment. So our gold was going free because we say gold should be exported only through Kotoka. And a lot of gold we know through studies go through Lome. Lome doesn't have metal detectors or SRF machines. So we left our borders ajar and the gold were going. Now what we are doing today is preventing the benefits from the sector from going to foreigners. When people argue, I ask them, so what do? We should refuse the Galamsey gold. Oh, refuse it and the Indians will welcome it. And you still continue to bear the negative, the brunt of the illegalities. So take your gold, make the best of it, but take steps to ensure that you comply with responsible mineral sourcing requirements of the OECD and the Financial Action Task Force. Don't make it a safe haven for those who want to take advantage to launder money. So that's what I would say. Now, there is also the Minerals Commission works very closely with the Gold Board. In fact, the Minister for Lands and Natural Resources is a member of the board of the Gold Board and chairs the ESG committee. So they actually try to harmonize policies on the other side because the Gold Board doesn't issue license for mining, but the Minerals Commission does that, and through the minister. So we are trying to ensure some collaboration on that front. We all know that the Minerals and Mining Act is currently under review. Some of us have been engaging with that process and making proposals. We are happy to know that a lot of our proposals have been incorporated into the current draft. So we are continuing to ensure that we make some improvement. I personally had to draft certain sections of the amendment bill on behalf of the Commission. Now, state funding of the aggregator, I built on it because we sat in Accra and expected the miners. So the Minerals Commission observed that, no, this is not working in our favor. So Minerals Commission began to now license individuals to go and buy gold and export. Then quickly, PMMC also started opening offices close to the mine. Now, if you want people to help you buy your gold and you don't invest, you don't have a skin in the game, chances are that a lot of your gold will get diverted. So there are clear criteria for the selection of the aggregator. And one of them is that the aggregator, you mentioned some funds and all that. Yes, you need to have a certain capital. You need to have an insurance in case you run away with our money. So there are safeguard measures. The money is not a gift. It's just a revolving fund that they are using to trade on our behalf. And all the gold they buy is given to the gold board. And then you get the next tranche to buy on our behalf. So I think we are good on that. There is a technical and financial criteria and proper due diligence, including police background report, okay, beneficial ownership disclosure, and all these are part of the requirements for obtaining licenses either for mining or for trading. I'll rest my case.
Thank you. Put your hands together for Dr. Manteao. We are very grateful. So what we're going to do now is to go back to the conveners of today's program. I'll take a minute remarks from each of them. So I'll start with Karim, and then Raymond will end it for us before we call it a day today. Okay. So, Karim.
All right. Thank you very much, Norvan. And once again, I think another round of applause is in order. I think this has been very insightful conversation around the subject matter of de-risking Ghana's gold trade within the context of a recovering economy like ours. I would like to thank everyone for taking time off to be with us and taking active part in the conversation with your question, very probing questions, and our resource persons. I mean, they were not categorized as such. I mean, they came as participants and 10 resource persons because of their expertise in the field, and also some of the invited resource people did not also show up. But I think you will agree with me that this is a very important conversation that we need to continue. This is just the beginning of a series that we will be pushing on, because there are a lot of issues that we need to dig further on if we are to collectively support the development trajectory that we are on to be better and to push our better to best. So I thank you for coming, and we look forward to more of such productive sessions. Last point is we have ongoing collaboration with the World Bank, and these policy conversations will be coming up. There's a number of them that are lined up. Some will be in person like this one, but there are others too that will also be virtual. And as and when we agree on the subject matter, we will inform all of you and invite you to be part of the process. Thank you very much. Yeah.
All right, Raymond.
Let me quickly make a suggestion.
Yeah. Okay.
Just a suggestion. So that you don't turn these convenings into meaningless routine. The key takeaways should be pulled together and directed to the relevant institutions. I'm very sure that the Gold Board will be more than happy with some of the suggestions that have come up in this meeting. Also, the Minerals Commission and other agencies should be on a headed letter. Bank of Ghana as well. I'm pretty sure they will be happy with some of the suggestions that have come up. Thank you.
Thank you. Thank you. Thank you. We're grateful. Okay, Raymond.
Thank you very much, Abdul Karim and colleagues for this very insightful presentation. When I was coming here this morning, I told Ken that my calendar is full. So I was just going to make a technical appearance and then after that I would go back to continue with the rest of the work. But the conversation has been so interesting and so informative that I could not leave, right? Actually, the first time I've left, my seat was just a moment ago because my body was asking too many questions. So, but I think it's been, all of us will agree that the expertise that we have shown in this room alone is enough to answer a significant percentage of the problems we are experiencing, not just with gold and gold board and Galamsey, but throughout the entire natural resource value chain. I think we had answers today. And some of them are applicable to revenue generally, which is something our team is involved in. Transparency, accountability, macroeconomic stability, all of it, I think, environmental issues and security as well. So just to thank you for that on behalf of the World Bank. And Dr. Manteo suggested that we begin to document these conversations and turn them into information that policymakers can use. I think that's a good suggestion. This is the second in a series that that we have done. The last one was that in this? Was that? Yeah, that was in November. Yeah, and we hope that we can continue with these conversations and attract this knowledge that that you all have. Knowledge does not just sit in government. I wish we get to a point where governments are willing to say that we don't know, so let's ask you in the civil society to also help us do this properly. I don't know what we're going to talk about in the next one, in the third one, but I'm sure it will be as exciting as this one. So we look forward to Abdul Karim and the economic governance platform advising us on what we can do. From me is a big thank you to all of you for participating. I took a couple of contacts. I hope we can continue being in touch so that we can continue the conversations. Thank you very much.
Thank you very much. All right, thank you. Ladies and gentlemen, today's discussion, all right, let me say that today's discussion confirms three realities, and you can also jot these things. First, gold is now central to Ghana's macroeconomic stability, very important. Second, opportunity without tight governance creates fiscal risk. So it's something that we need to look at. And thirdly, clarity of mandates, transparency, and risk controls will determine whether gold becomes a windfall or a liability to us as a nation. So these are three important realities that we should be walking out of this place with. And for us, I say that our tax going forward is very, very simple, not difficult. Why am I saying that? De-risk the system, protect the public balance sheet, and ensure value stays in Ghana. And as has already been said, EGP will consolidate today's insights into practical recommendations for the policy makers and stakeholders that we need it. Thank you very much. My name is Norvan Hayford. We hope to see you, and hopefully when we call you again, either virtual or in person, you will make time and be part of the conversation. Until then, thank you also for those of you who are online and on the social media handles. Have a very good afternoon, all of you.